Hey, good morning, everybody. Good morning, good morning. Nice to see you guys today. Hope everybody's doing well. Hope everybody's ready to learn some stuff. I am. I learn every day from you guys. I appreciate it. So we're going to keep doing it. You're mobile today, Andy? No worries. Mobile's a good way to be. Good morning, Rob. It's good to see you guys today. Today is Tuesday, April 12th, ladies and gentlemen. Good morning, Hamid. And we are checking news to see what's going on. 9 a.m., we're there, 1 minute off. There's going to be an FOMC member that speaks. What did I say? That was a test to see where you guys were at. Um, should I be using the 34 range? It's a 21 range chart on the net in the NASDAQ workspace, Gary. So Tuesday, April 16th, sorry. And guys, we're just checking news this morning. At 8:30 a.m., there were the medium impact building permits. Pretty good spike in the market there. And then we've got industrial production again at 9:15. So 15 minutes out, guys, we have the potential for the market to spike and jump. And then at 1:15, Fed Chair Powell speaks, always high impact. Will be done here. But if you are trading, careful. There may be a lot of violence in the market. Um, we're going to talk about everything today, guys. We're going to focus on rules primarily, and we're going to do it with the effort, whoops, to make you guys chart readers. I say this every day. Every day I'm like, be a chart reader, guys. Be a chart reader. Once you're a chart reader, everything is possible. Once you're a chart reader, life becomes easy. Once you're a chart reader, there's no bounds because chart reading is about 90% of your day. And chart reading is going to give you these awesome abilities to recognize where the market is likely to continue, where it's likely to go, where it's likely to stop. And chart reading doesn't happen overnight. Good morning, Jess. Chart reading is a process of the work that you put into it. When you have a focus, when you're really focused on something, and guys, our first hour is going to be focused on the high probability trend trade. It's a trade that's going to teach you to read your indicators. It's a trade that's going to teach you to recognize three advantages that are so important no matter what kind of trade you're taking. So I literally spend an hour every morning talking about the same thing. The first hour is the same hour. The first hour is rules and what they mean and what they mean to you. And our first hour is dedicated to trade entry precision. Because without entry precision, guys, management is difficult. Without getting it at the correct spot, trades become more difficult to manage. And I'm sure we'll see examples of that today. So we're going to focus on chart reading. And I want you guys to realize that this is your path. So you newer guys, this is exactly how to get to where you want to be. We're going to focus on chart reading through the highest probability trend trade that we teach. A trade that typically wins 70 to 80% of the time. This is a trade that creates an enormous amount of confidence through the memory of success, but this is the trade that teaches you to read your charts. And your chart reading is what gets you to the entry for the high probability trend trade. And then once you can define that area where the market is likely to continue, management becomes a much easier task. So the easiest way to get to where you want to be is take a lot of pictures. Guys, if you commit to 15 pictures a day, you're taking over 300 pictures a month. And these pictures create recognition. Recognition comes through repetition, through seeing the same patterns over and over, from seeing the same advantages over and over, until they just are drilled into your brain, guys. So every trade that you take, every chart read that you're not sure of, every item that you need a little clarification on, take a picture, drop it in the room. The people that post the most, guys, they get to where they want to be the fastest. But when you post in the room, especially trades, guys, it's important that you tell me what your chart read was, because the goal is to make you a chart reader. So you have to tell me what you see. You have to tell me where you got in. You have to show me where you got out, because there's all of these lessons, and each and every time you post in the room, it's like a private session. So I'm going to look at your chart read and we're going to make sure that you're reading the indicators correctly. I'm going to look at your entries and we're going to see if there was an opportunity for you to have a better entry, a less risk entry, a more reward entry. And we'll do the same with the exit, guys. We'll look at the exits and we'll see where you got out. And maybe you held a little too long or jumped ship a little early, and we'll just have conversations about all of it. The second thing is use your spreadsheet. Guys, your spreadsheet is probably the most underutilized tool out there. The first tab is where you're going to put all of your trades. It's just a trade journal. Study it every morning. See what you did. Focus on it. Repeat the things that bring you success. Good morning, JW. Avoid the things that are taking it from you. The favorite looks section is blank. This is for you guys. This is what you need to fill in. The favorite looks section is where you're going to create your trading plan, where you're going to put the looks that you're comfortable with, the looks that provide a statistical advantage, the looks that are rules met. Those go into your personal trade setup looks, guys. And this is you literally building a plan, building a trading plan that is repeatable, that is testable, that has been proven to win more than it loses. The last tab is where I did all the work on my sheet that you need to do on your sheet. All the pictures of the trades that I want to take, and there's even entry sequences for longs and shorts. And great entries create management opportunities. So this sheet also has a very mechanical management plan for you new guys. And then it's a lot of ideas. Hey, good morning, Muser. On when you can hold more, when you need to get out, because management's the second part of what you do, and it very much relies on your chart reading. There's a whole section dedicated to patterns that just repeat themselves over and over again, and then a whole section dedicated to those likely to stop areas, those termination conditions. Guys, this spreadsheet, this is your trade journal, this is your plan, this is your reference, and then there's a 101 tab, guys. The high probability trend trade has 3 rules. They're each highlighted in green. You need to go back and you need to take pictures of the individual parts. You need to take pictures of the rules being met and commit what it looks like to have those advantages, and commit them to memory. So use that spreadsheet over and over. I just dropped mine in the room. Steal it. I've done an enormous amount of work for you guys. Hopefully you'll match it. Hopefully you'll do the same. And I'm telling you right now, if you keep taking pictures of the same thing, it's difficult to not recognize it. If you keep looking at pictures over and over, it really is. It's not easy to miss it. So we're going to learn the trigger line, the Fibonacci rules for when it's okay to trade. We're going to focus on the high probability trend trade. We're going to break it down into the individual parts of it so that you can create the whole. You guys simulate, practice, make mistakes, be okay making mistakes. Accidents happen, right? Guys, if you're just now learning the rules, don't create unrealistic expectations for yourself to be great at this on day one. Don't put the pressure on yourself to never make mistakes. Guys, make all the mistakes, but you need to post them in the room. We need to talk about your mistakes. Guys, I make mistakes every day. I really do. But I make fewer mistakes than I make good choices. So my trading reflects that. You need to simulate, you need to post in the room, guys, and practice the correct rules. Make sure that you have advantages. I see a lot of times simulator millionaires, guys that are, oh man, I made $20,000 today on simulator. But the second it goes live, they can't seem to make a penny. And this is because on simulator, pardon the phrase, you've got absolute balls of steel. You've got no fear. There's no repercussions. So you do everything hoping, wishing, wanting. And the second you translate to live money, guys, you just take an ass kicking that you can't even describe to family members because it might scare children. So practice the right rules. Post them in the room. Let's talk about them. We're going to simplify today. I simplify every day. I'm not that smart. And the less I have to think about, the easier my life is. But I have to know what looks I'm going to commit to. And guys, that goes back to the spreadsheet. What's it going to take to get you into a trade? What does it look like when your rules are met? You've got to see that over and over and over and over again so that it becomes easy. It's not necessarily a difficult thing that we do, but without repetition, it becomes a little more difficult. Without seeing these looks over and over, you're going to have to work a little harder for it. So guys, make sure that you're taking pictures and talk about what you're seeing. Make sure that you're recording your trades and go back and study them, and then keep it simple. Let's keep it on 2 charts today. Um, there's more charts. Let me say this right now, guys. There are more charts, there are more trades, there are more opportunities. There are 1,000 ways to use this software. I'm going to give you the best way. I'm going to give you the easiest way. I'm going to give you the way that optimizes your chances of success. I'm going to give you the way that that turns you into a chart reader, because once you're a chart reader, once you have that skill, people can't take that from you, and that's where the trades come from. So 2 charts, guys. There's a large chart and there's a small chart, and I want to show you why we use a large and a small. The large chart is a reflection of what the people in charge want. The large chart is the large crowd. The large chart is going to define direction. It's going to define momentum. It's going to define areas. The large chart is going to say, this is what the market is doing. This is what the people in control want it to do. Why don't you do yourself a favor and go with them? Trade with the large crowd. Trade with the large chart. Let the large chart lead the way. The small chart is the small crowd. These are the guys willing to fight the large chart. These are the guys, good morning, Grant, that fight everything that the people in charge want. And guys, we rely on them because honestly, they give us our entry. So your large chart, the most current bar, will define the direction of the market. If your large chart background is green, it's going up. Let's only look for rules to be met for high probability trend trades long. If the background is red, it's going down, and we should only be looking for rules to be met for high probability trend trade short. It's a brand new user. Give yourself the advantage of trading with the direction of the market. Large chart is going to define momentum. That's going to be rule number 1. And it's also going to define the areas that may be problematic or helpful. And rule number 2 is going to help you to identify when we've reached a problematic area, when that next trade shouldn't be taken. Once rules 1 and 2 are met on the large chart, on the most current bar, you're going to go to the small chart, and it's going to provide you an X-ray of that bar. The small chart is where the small crowd resides. The small chart is going to give a little shove back to areas inside of triggers. The rule number 3 is taking advantage of the small crowd, using their efforts against the large crowd to our advantage, entering the market where it's most likely to continue. And this is going to reduce risk. It's going to maximize profit potential. And what you're going to find is that inside of 1 bar on the large chart, there may be 15 to 30 bars. But when the large chart is strong enough, you're going to buy Fibonacci support on that smaller, faster chart to go with the flow. And when everything says down, you're going to sell high at Fibonacci resistance on the smaller, faster chart. And we're going to break it down how to do that, guys. We're going to do it with 3 rules. That's it. 3 rules, 2 charts. Large chart leads the way. Write that on a piece of paper. Large chart is going to define the momentum of the market through rule number 1. Large chart is going to define whether or not you have room to your profit targets through rule number 2. And when those rules are met, your smaller, faster chart is going to utilize a limit order at areas inside of favorable large triggers, and that's going to get you in where the market is most likely to continue. So we're going to start with rule number 1 because it seems like a great place to start. Rule number 1 says that the large chart must have strong triggers. Strong triggers, ladies and gentlemen, are identical on any time frame, any chart, any way you look at it. Strong triggers are strong triggers, and they create the advantage of momentum. Strong triggers means that your small triggers, these solid lines, have broken above and away from your large trigger lines. And your large trigger lines are those dashed lines. These are moving averages. That's all they are. I don't know a lot about the math, but I do know that they're moving averages. And when the smaller, faster breaks above and away from the larger, slower, the space in between the two lets me know that the odds are favorable for the market to continue up. So there's my first advantage, guys, momentum. Strong triggers gives me odds favorable momentum, and that's the phrase you're going to hear in class all day long. In a downtrend, small's below the large are wide, they're angled in the direction of the trend. It's the space between the two that lets me know that the odds are favorable for the market to continue down. When I have strong triggers up, It's the best time to buy Fibonacci support on a smaller, faster chart. That's what these tails are. These are just little retracements. You don't see it on the large chart because it's 15 to 30 bars on the small chart. So it's that dissection that lets you pinpoint exactly where that tail is most likely to continue. Same thing when everything is going down. You'll be able to pinpoint where that tail is most likely to continue. You'll be able to sell high at Fibonacci resistance. And then when the small triggers begin to return to the large triggers, there's this life cycle of momentum. I'm going to go to my next picture. Strength is best. Guys, odds favorable momentum pushes the market in the direction of the trend. Odds favorable momentum is capable of breaking key Fibonacci areas. Odds favorable momentum will even cover up some of the mistakes that new users make. And odds favorable momentum for the brand new user should be what you insist on. And this is where you're going to sell that Fibonacci resistance. This is the best of the best. And then when both triggers are down, but one of the lines of the small triggers works its way inside of the large, you can visually, you can see, it becomes clear after a little study that the market is slowing, that you're losing that momentum, that advantage is going away. When you're comfortable with your chart reads and looking at multiple things at once, you still may find opportunities to go short. They're just going to have to be managed a little more aggressively. And then when both of the triggers are swallowed up by those large triggers, we call this a weakening of the large triggers. Listen to the words, guys. Words are important because weak triggers means anything can happen. Strong triggers means odds favorable to continue in the direction of the trend, guys. If you learn to trust that the words associated with the looks kind of guide you on what is high probability and what becomes low probability, guys, you're going to start to steer yourself away from these maybe trades and really focus on the solid trades. Weak triggers can create deeper retracements. Weak triggers can create indecision in the market. Weak triggers, when you reach Fibonacci support or resistance, mean that these areas are more likely to hold, that reversal is more likely to happen. And that's kind of our segue to rule number 2. Once the large chart defines the direction, once the large chart gives you odds favorable momentum, we're going to make sure that we're not trading into areas that can be a problem. Rule number 2 says termination conditions false, that we haven't reached one of those areas likely to stop the market. If we haven't, it means that we have room to our profit targets. And the advantage is that clear path, nothing between you and your targets, guys. Being able to ride that wave of momentum without running into anything solid. The areas that we're going to look for, guys, are going to be divergence highs. Divergence means loss of momentum. That's it. That's all. Don't overcomplicate it. If you see that magenta line from a high pivot, or you see that cyan line, that light blue line from a low pivot, all it means is that there was a loss of momentum right at that point. We're also going to look for red Fibonacci resistance, blue Fibonacci support. We're going to look for those yellow 1-to-1s. And guys, these lines can cause trouble. These lines are where the large crowd is making decisions, where buyers are buying and sellers are selling. These lines are where profits are taken. And these lines are sometimes where buyers and sellers find themselves fighting. One side wants it to go up, the other side wants it to go down, and you see it at these key areas, and you'll see the indecision at these key areas. So we're going to identify them with a simple recipe so that you guys know whether or not you should be taking that next trade. And I'm going to take a picture of the picture, and I'm going to give you guys the recipe. And the recipe doesn't change. It doesn't matter what market you're on. The recipe doesn't change. It doesn't matter what your opinion is. The recipe doesn't change. The first thing that has to happen is price reaches. Price reaches, your dynamic Renko bars, get to that area, fibs, mid bands, yellow 1-to-1s, because this is where decisions are made. And if price doesn't reach it, there's nobody making decisions typically. But if price reaches Fibonacci support, all you have to do, ladies and gentlemen, is ask yourself, where are my trigger lines? If they remain above Fibonacci support, Don't take any more trend trade short into that area. That's an area that may stop the market. That's an area that may create an untradeable bounce. That's an area that may create a fight between buyers and sellers. I want you guys to accept day one that you have absolutely no idea as a brand new user. You don't know if it's going to bounce, if it's going to break. You don't know if it's just going to bounce in that area crazy for a little bit. What you need to know is that you're not in charge. This guy's in charge. And this guy is going to make decisions. This guy is going to react to these areas. This is the same guy that creates momentum. This guy is who we want to be with. We can be the remoras, and when he gets a little bit of work done, we're going to capitalize. We're going to take advantage. If we try to be first, if we try to be the one that hopes areas break, we typically go right down the gullet. So if price reaches the area, no more short trades. Is everybody cool with that? Especially my newer users. I just want to make sure that you're comfortable with this idea. Maram, Troy, price reaches an area. Let's just sit on our hands and do nothing, because check it out. When price reaches Fibonacci support, oh my gosh, I have to take a picture of this one. This is rule number 2, keeping the powder dry for you guys. Here's your lesson, 100%. Price reached Fibonacci resistance. None of the triggers broke. No long trades. Price comes, resistance held, resistance held, resistance held. Look at that, the divergence low line, support, support, divergence low line. Guys, what you have here is a consolidating market. What you have here is a lot of indecision coming from buyers and sellers, and they're caught in a range right now. Rule number 2 is going to help you identify this. The ES looks similar. Rule number 2 is going to keep you focused on the best of the best. And guys, I'm going to tell you right now, this is where accounts are blown out, and this is where fortunes are lost, trading into areas that may stop the market. And guys, that is a beautiful look at an awful lot of termination conditions. You know what? It's actually so nice. I'm going to go to my 101, and I'm going to take that picture and I'm going to drop it in here, because I want to come back and study this look. And I want to make sure that I understand those simple rules for termination conditions. If price reaches an area and the triggers can't break it, it's okay to sit on your hands. It's okay to do nothing. It is perfectly all right to not feel like you have to hope that this goes. But then the second part of that is, if that's not a clear path, where'd my picture go? When is the path clear, guys? When your small triggers and your large triggers get below an area. So, for example here, price reached Fibonacci support, and we all decided to sit on our hands because the triggers were still above it. And we said to ourselves, man, that's a lot of momentum, but I don't know if it's going to break. I don't want to hope that it breaks. If I wish that it breaks, that's probably not going to be very effective. But if I sit on my hands and I wait, and I say to myself, once the large triggers and the small triggers are below support, well, support behaves as resistance. The area is broken, and now it's a clear path. And that's rule 2. With that clear path, you'll notice that it hadn't reached support yet. You'll also notice that there was odds favorable momentum. Ladies and gentlemen, you will be able to identify where the top of that tail is most likely to form. And this becomes the best of the best, ladies and gentlemen. When the small and the large clear the area, when the path is clear, you're looking for those rules to be met. You're looking for that momentum. You're looking with that clear path for a pullback to Fibonacci resistance. So, guys, there's 2 options as a brand new user. Either price reaches and none of the triggers break, not a clear path. Small and large break through. The path is now clear. Let's look for our rules to be met, guys. Is everybody okay with that? New users feeling good? We're trying to keep it simple in the beginning. We're trying to keep it focused. We're trying to make sure that you guys don't have to outthink yourselves. Once you're a chart reader, once you're comfortable with terminations, with clear paths, guys, there's going to be another opportunity for you. This is what we call a medium probability opportunity. And this medium probability opportunity means that 50% of your trigger lines have made it through the area, 50% have not. But the key is with odds favorable momentum, with those strong triggers. Remember when we said that strong triggers can break areas? Guys, this 50% through and 50% not with strength means that the area has the potential, and that's a very powerful word because it isn't definitive, has the potential to break. It's not a clear path. Rule 2 not met, can't be high probability trend trade. So guys, this is your third option. Once you're a chart reader, this is going to be your second trade, the third option in an area. So when we look at the termination conditions, guys, and we really talk about it, we're going to look at a couple different pictures here. If price reaches a divergence high line and the triggers remain below, it's a termination. Guys, just a divergence is just a pivot with a loss of momentum. If price reaches Fibonacci resistance and the triggers stay below, it's a termination condition. And if price reaches these yellow 1-to-1s and the triggers stay below, guess what? It's a termination condition. No more long trades, guys. It's okay to sit on your hands and do nothing. If price reaches yellow 1-to-1s, the triggers remain above, sit on your hands. There may be a fight. There may be a bounce. There's a lot of indecision, but the only thing that we're sure of is don't go short. This is an area that may stop the market. The same is true with Fibonacci support. There's another one of those divergence lows, not a termination condition, just a pivot with a loss of momentum. But when price reaches that key area and the triggers stay above, now it's a termination condition. Guys, learn these looks. They're going to break every now and then. They're going to trick you into breaking your rules. A little bit of patience. Let them break. Let them reverse the market. Wait for the reaction is going to save you a lot of money in the long run. So, price reaches, no triggers through, not a clear path. Rule number 2 is not met. Small and large, smalls through, large not, strong triggers, has the potential to break, still not rules met. Small and large clear the area, resistance becomes support, the path is clear. Let's look to sell Fibonacci support on the smaller, faster chart with that momentum, guys. Is everybody cool with that? Feeling okay? Not so bad? Doesn't have to be difficult? Quiet class today. That's cool. I know this stuff. Remember that. I'm trying to teach it to you. Price comes down, creates a pivot. There's a loss of momentum. I know that because I see divergence. That's not a termination condition, guys. That's just a pretty blue line coming off of a pivot. I don't even know about it until about 3 bars up. But when price reaches the divergence low, the triggers remain above. Now it's a termination condition. And if price trades below and back above, now it's a pivot stop out. Here's your pivot. Price trades below, above, the triggers don't. Now it's a pivot stop out. And guys, the user guide is very clear. Do not trade into a pivot stop out. Do not take that short into a pivot stop out. The likelihood of it winning is awfully slim. If this no triggers through termination condition reverses the market, ladies and gentlemen, we're going to call this a strong bottom. And a strong bottom is the precursor for the highest probability trend trade you can take. Price reaches yellow 1-to-1s, even with momentum, and the triggers remain above, and you guys all sit on your hands and do nothing. Congratulations, you didn't take a loser into support. And it bounces big right into resistance. All the triggers remain below. The path isn't clear. And congratulations, ladies and gentlemen, you didn't take the long loser. The triggers are not odds favorable. The path isn't clear, and you guys spend 45 minutes sitting on your hands doing absolutely nothing. 90% of your day, ladies and gentlemen, is sitting on your hands and doing nothing. 10% of your day is waiting for momentum, a clear path, and a pullback to support inside of favorable large triggers when everything is going up. What you don't do here when your rules aren't met is going to allow you to keep an awful lot of what happens here when your rules are true. So guys, this is large chart. Large chart defines areas. Large chart uses lines to determine trouble. On your small chart, you're going to use lines for entries. But there's one termination condition, one instance where rule number 2 isn't met on a small chart, and that's 3 divergences in the same price range. Three divergences may terminate the trend. There's that powerful word again, may, not does, or is destined to, or hurry up and go the other direction because you had three divergences. Three divergences may reverse the market. It may terminate the trend. It becomes more powerful when that same weak anything can happen trigger looks is true. So three divergences might do it. Three divergences with weak triggers is more likely to. And then three divergences when the third pivot is higher than the previous from a low or lower than the previous from a high creates a head and shoulders pattern. These three divergences might stop the market. When the triggers get weak, it's more likely. With that third pivot higher, it's more likely still. Guys, you're going to use this look to know when you shouldn't take that last trade. And this look on a small chart is also going to identify change that you won't see on a large chart. So even with odds favorable, even with a clear path, when you're saying to yourself, man, it's time to go long, if you get this look on the small chart, it's okay to sit on your hands, to wait a minute, to do nothing, to see what the market is going to do, because visually you can see three losses of momentum. Is everybody good with termination conditions? The large chart does it, guys. The large chart leads the way. Large chart gives you the direction. Green is up, red is down. Large chart defines momentum. Space between the two is strength. When they return to one another, it's weakness. Everything is a may, Rob. Everything is a may. Everything has the potential. I try to never speak in absolutes. Because the reality is that the second I begin to speak in absolutes, I believe that I know what the market's going to do. And I don't. I never know what the market's going to do. But what I do know that patterns repeat themselves every day, every market. And I do know that when my pattern shows me momentum, a clear path, and an entry area, well, then I have a pattern that I can go back and, Rob, if I take 1,000 pictures of the exact same pattern, it's likely to win 70 to 80% of the time. It creates a statistical advantage. So you guys have to understand that just because the direction is up doesn't mean it's going to continue up. But if the direction is up and I have the advantage of momentum, well, it's more likely to. And if I have momentum and a clear path, it's more likely to, right? I'm creating the statistical advantage. And then all I need to do when rules 1 and 2 are met is turn my attention to a smaller, faster chart, guys. And we are going to refine the large chart. And we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And this is how we're going to enter the market, where the market is most likely to continue. So during the live market, when the large chart says up, when the large chart says strength, when the large chart has a clear path, my small chart's going to be screaming to the upside. And I'm just going to look for triggers, and I'm going to look for lines, fibs, mid-bands, and yellow 1-to-1s. And I know that my entry comes from areas inside of these favorable large triggers. My area comes from a line inside of the triggers. Your triggers are moving averages. This is where I expect the market to correct. But my lines give the market something to bounce off of. So it's the combination of the two. I'm going to wait patiently for the small crowd to step in and do their thing, to give me a reversal bar, to signal the beginning of a pullback. And just a little refresher course real quick. A pullback is nothing more than a small retracement counter to the underlying trend. The small crowd gives us a shove. So the second the small crowd gives me a shove, I'm going to look at my triggers and I'm going to look at the areas inside and I'm going to say to myself, my window of opportunity, my spot where the market is most likely to continue is going to extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. So what I'm going to do, guys, the reversal bar prints and it says, hey, Mark, the small crowd is doing their thing. Let's look for those trigger lines. Let's look for the large trigger, the synthetic trigger, and let's make sure that they're going up. Let's make sure that they're trending on top of each other. Let's make sure that I'm not committed to the trigger lines. Let's identify the areas within, from the highest point of support, being a mid-band in this case, to the lowest point of support, which just happens to be yellow 1-to-1s, and there's a couple lines in between. Guys, this black box, let me turn it into a shaded box. This shaded box defines where the market is most likely to continue, where it's most likely to bounce. And here's the deal. I don't enter on the reversal bar. The reversal bar starts the beginning of the pullback. I don't enter when I reach the triggers because it's just a moving average, and I don't expect triggers to make the market bounce. I enter at the highest area of support inside of those triggers, and I'm at the highest area because the large chart has odds favorable momentum. The large chart has a clear path, and it's tough to stop that momentum. It's tough when there's nothing for them to bounce off of. So I'm not expecting it to drop super low. It can though, and this is what I want you guys to recognize and realize. This is where I'm entering. And if it goes a few points beyond it, I'm still where the market is most likely to continue. And if it goes all the way to the bottom of that window, I'm still where the market is most likely to continue. My advantages are still in place. The large chart rarely blinks. This is just a small little retracement on a smaller, faster chart. Things that freak out new users. But Mark, my triggers turned against me. Isn't that a loss of momentum? Guys, momentum is defined on the large chart. But Mark, it bounced off the triggers. This is the scared entry. This is the fear of missing out entry. And we've all done it. And this fear of missing out entry, guys, doesn't do anything but increase your risk and decrease your profit potential. Same thing for you guys that jump in over here, afraid that it's going to go without you. And the cool thing is once you can identify where the market is most likely to continue, once you can recognize from the highest point of support to the lowest point of support, once you develop a little bit of trust that this is where the bounce is most likely to happen, you can put your stop 4 or 5 ticks below that window of opportunity. You can protect yourself. You can say to yourself, if it goes beyond this window, this isn't a trade that I want to be in. Guys, your first 30 days with me is designed to recognize the best of the best entry, to learn to read your charts and recognize advantages, and to piece them together to create a trade. And this is the entry that you never want to miss. This is your highest probability trend trade entry. This is the entry that typically 70 to 80% of the time reaches that profit target, gives you that bounce at the areas inside of favorable large triggers. And guys, this is the trade. Well, if the market's going down, Muser, for the high probability trend trade, and this is the thing, rather than saying the entry is always, how about the entry for a high probability trend trade is always, for a long trade, going to be that highest point of support inside of favorable large triggers. If the market is moving up with strength, it's always going to be that high probability trend trade, highest point of support. But if it's going down and the rules are met for a high probability trend trade, it's always going to be that lowest point of resistance. But remember, I'm saying it's a high probability trend trade. Why? Because if the market is going up and I'm looking for the entry and I'm really looking for that high probability trend trade entry, Muser, it means that my large chart has to be strong triggers, clear path. So I don't expect a giant pullback, right? I don't expect it to push deep into that window. So I try to capture it at the top of the window. And then the opposite is true. If I'm looking for a high probability trend trade short, it means that I'm screaming to the downside. It means that I'm absolutely flying. And I don't want to hope that it goes to the higher level. I want to get in at the lowest level because with this much strength and nothing in the way, this is my best chance. And the cool thing is that I know where the market is likely to continue, which means that I understand fully where the market shouldn't go. And I'm willing to accept a little drawdown in the middle of a trade, and I'm willing to accept it going a little bit past that lowest point. But the thing is I don't want to trip over a couple pennies to save a couple dollars, right? I don't want to put my entry at these yellow 1-to-1s in resistance because look how it held, right? And I don't want to put my entry at this 1-to-1 because the market went off the higher points. So I see this a lot with new users where they'll try to not get run over. And they'll say to themselves, I know that my entry comes from the highest point of support, but I'm scared. So I'm going to put my entry at the lowest point of support and hope that they push through. And then they miss the trade. And then they jump in up here and then they get stopped out and they're just angry. So for the brand new user, highest point of support inside of favorable large triggers, or lowest point of resistance inside of favorable large triggers. Does that make sense, Muser? Your initial stop goes where the market shouldn't, 4 or 5 ticks outside. Guys, be willing to let that stop get hit. Every 2 or 3 out of 10 on the high probability trend trade, that stop's going to get hit. It's a normal part of the positive equity curve, and you need to be okay with it. But if you're going to take that stop, if you're going to take that hickey, make sure that you had odds favorable. Make sure that you had a clear path. Make sure that you got in at the right spot, and understand that it's just a cost of doing business. And then the cool things, awesome. We'll go through and we'll find one together too, is once that reversal bar prints in the direction of your trade, guys, you can go a tick or two above it. And it's not uncommon for us to take losing trades, for you guys to take losing trades and only lose $20, $30, $40 on a trade. Nice, Grant. Rather than hoping and wishing and wanting and taking these big losers. Guys, if your losers are typically $50 to $100 and your winners are typically $200 to $300, it's difficult if you're winning 60, 70% to not make money. So the high probability trend trade, guys, getting you in where the market is most likely to continue, giving you the advantage of being able to recognize momentum, being able to recognize when areas have the potential to break. And then, I'm crashing my freaking NinjaTrader right now. Dagnabbit. We're going to go do one. We're going to do a bar by bar together, but let me pull that back up. Man, you can't drag and draw on it. So this is coming up right now. Let me let that come up, and then Muser will go through it. But before I do that, let me give you guys a plan. Remember when I said we're going to keep it simple? We're going to keep it focused. We're going to try and make it the absolute easiest, the clearest, the most likely to win. Guys, this is the KISS plan. The KISS plan is designed as a stepping stone. The KISS plan is designed to get you to where you can read your charts. The KISS plan is keeping it simple, keeping it focused, giving you a trade that creates confidence through the memory of success. And guys, the KISS plan is just the beginning. But if you focus on the KISS plan, your confidence is going to grow. And if you focus on the KISS plan, you're going to feel better and you're going to learn to trust these entries and you're going to find yourself in a position where trading becomes more relaxed. And then through simulation, study, class feedback, continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, that is a hoity-toity AI-generated way of saying once you're a chart reader, you're going to find opportunities. You're going to find more opportunities. You're going to find opportunities that resonate and make sense to you. And you'll create your plan. But in the beginning, if you really want to be consistent, if you really want to be solid, if you really want to give yourself the highest chance of success, never fight the large chart. Just make that a must. I'm not going to fight that momentum. I'm not going to fight that direction. I'm not going to trade into those termination conditions. And then define your entry. Personalize it. Make it yours. Don't take Nexgen's high probability trend trade entry. Take David's high probability trend trade entry. Take Muser's high probability trend trade entry. Take Cav's high probability trend trade entry, because guys, if it's yours, you're more likely to stick to it. And this is a checklist that goes through the conditions for entry. This is a checklist that goes through the conditions for entry. What has to happen for you to get into the market? And guys, let it be simple. Either my rules are met or they're not. And if they're met per this checklist, I've never had anybody do worse than 70%. And then on that same token, here's the same checklist with what it looks like to have a termination that reverses the market, what it looks like to have momentum, and what it looks like to not have momentum, what it looks like to have a termination, the potential to break and broken, and what it looks like to identify your window of opportunity, both long and short. You should be studying this 2 or 3 minutes every morning before you ever open charts, this is what I'm looking for. So guys, I'm going to give you the KISS plan, the high probability trend trade checklist, the one with pictures, the one to print out to put on your desktop. But guys, your high probability trend trade is your first trade. It's the trade that makes you a chart reader. It's the trade that gives you confidence through the memory of success. It's the trade that has you identifying advantages and learning to speak to yourself in terms of advantages rather than wishes and wants and hopes that trades work. And once you can define your entry, once you can pick where the market is most likely to continue, guys, you're going to have to manage it. Management is the second bite of the elephant that is learning to day trade. Have you guys ever heard that old adage? How do you eat an elephant? One bite at a time. Because if you say, I'm going to eat an elephant, it becomes overwhelming. If you say, I'm going to be a day trader, it becomes overwhelming. But if you say, I'm going to find momentum, well, you're going to learn to find momentum in a day or two. And if you say, I'm going to couple that momentum with a clear path, it won't take you more than 3 or 4 days to understand when that path is clear through a little bit of study. And then if you say, when I have momentum and a clear path, all I'm going to do is get in where the market is most likely to continue. Guys, within the first week with a little focus, you'll be picking off these entries, maybe not consistently, maybe not trusting them 100%, but it can be done if you keep it focused. And then once you're in, your management should be just as mechanical as your entry because you're not a chart reader yet, because there isn't the ability to look at your indicators and know exactly what they're telling you instantly. So your mechanical plan is based off your ability to find the best entry. And guys, you will create a management plan that's so far outside of this once you're comfortable. But until you're comfortable, let everything you do revolve around getting in where the market is most likely to continue. Because if you do this, you understand where the market shouldn't go. And guys, your initial stop goes where the market shouldn't go. New user problems. Well, Mark, I don't want to risk that much money. I'll just put my stop right here. And that's typically when the market comes up and hits your stop and then drops like a rock. It's like they know exactly where you're breaking your rules. So the initial stop goes where the market shouldn't. And one of two things are going to happen, guys. It's either going to hit your stop, you're going to lose a little money, you're going to dust off, tape up, play hurt, and look for the next trade, or it's going to give you a reversal bar in the direction of the trade, at which point you're going to move your stop 2 ticks above that reversal bar, or if it's a long trade, 2 ticks below. So your risk has been cut in half. The market's going the direction of the momentum and the clear path. And once again, your hands are in the air. You roll your chair back from the desk and you say, it's either going to stop me out, I'm not in control of that, but I have every advantage, or it's going to hit my first target. And for brand new users on this KISS plan, I've put that first target at $100. That $100 target, you're going to hear NinjaTrader tell you that you got paid. That $100 target, you're going to feel confident because you just got paid. That $100 is going to establish trust that when you do take the best entries, you have a higher potential to win. And you're going to go break even once you're paid, because what you're going to do is you're going to hold for a second target. And it's scary because there may be fluctuations. But by going break even, it makes it easier to remember that odds favorable and a clear path is the whole reason you got in the first place. And it's either going to hit that second target or it's going to stop you break even. But if it gets to the second, like it does typically 70 to 80% of the time, you've just won $300. You've just put $300 in your account. I'll say earned, not won. You have just gone through the life cycle of a high probability trend trade, and you're going to exit at 200 no matter what. You're not going to wish that it goes further. You're not going to hope that it goes further. You're not going to get scared that it's going to go against you. You're just going to exit. You're going to bank that money, and you're going to wait for your rules to be met again. And then once you see this for a little, you're going to learn to trust large charts. You're going to learn to trust odds favorable momentum. You're going to learn to trust that clear path, and you're going to start turning those $300 trades into $500 trades and $700 trades, because your chart reading is going to keep you focused on advantages instead of disadvantages. And guys, this is the best of the best. This is the highest probability trend trade. This is the one that if you just give me 30 days on it, you'll be amazed at what you can pull off. This KISS plan is the exact same plan that I've had brand new users get funded. in those prop firms within their first 30 days with Nexgen. This KISS plan, if you are one of my older people and you know exactly who I'm talking to and you're not finding success, come back to the KISS plan. Keep it focused. Get to the point to where you can begin winning more than you lose again. Stop looking for everything. Look for the best. Calling you old, Ron. Ah! And I'm far enough away that I feel safe. And guys, once you're a chart reader, you're going to get more opportunities. The first one is going to be that 50-50 trade. And if you guys remember, that 50-50 trade means that you don't have a clear path. It means that the market has the potential to break through that termination condition, but it hasn't yet. So the clear path goes away. Cover it up, which means that if you really want to have that highest level of success, well, it doesn't really make sense to sacrifice momentum, and it doesn't make sense to sacrifice an entry area, a low-risk entry area, a tight window of opportunity. So this KISS plan gives you the best way to take a 50-50, that medium probability trade. This will be your first medium probability trade. Ladies and gentlemen, I'm going to warn you right now that this is the most abused and lost trade with Nexgen users because hope outweighs rules on these trades for a lot of people. The first thing that it says to optimize your chances of success is let's hope momentum breaks one area, not 7 areas stretched out over a range. One area. Keep it concise. Give them less decision-making points. And it should be coming from a good top or bottom. It should be coming from a termination condition that created a reversal in the market because decisions were made with so much strength that it reversed the market and sent it the other way with odds favorable momentum. You should have strong triggers on the large chart. You should also have strong triggers on the small chart. It's the exact same look. Small's outside of the large. Guys, this is the beginning to get you in. And then here's the key, the most broken rule. No divergence on the 5-1. Does everyone remember what divergence is? If you put it just in the most simple terms, divergence means a loss of momentum. And if you're speaking to yourself in terms of advantages, that's pretty easy to recognize. But if there's a loss of momentum, ladies and gentlemen, I just blew the first rule of Fight Club. Don't sacrifice momentum if you don't have a clear path. It's ridiculous. So if that's a no, it's no trade. You have to sit on your hands and do nothing. And no matter what happens next, you got to say, you know what, that wasn't the best of the best. But if it's a yes, you're going to use those high probability trend trade entries. And then if divergence is there, no trade. Guys, it's not an accident that I just put it in there arbitrarily outside to remind you this is the killer. This is the one that messes it up for new users. And then you have to manage it. Once you're in, you have to manage it. It's not a high probability trend trade. The management will be different. And you have to know what you're getting into to know how to manage it. And this is one of the biggest problems I see as people begin to develop management plans is they say to themselves, I'm going to take this trade that's not a high probability trend trade, but I'm going to manage it like a high probability trend trade, like there's absolutely nothing wrong on any charts. Or I'm going to take this 50-50, this medium probability trade, and I'm going to manage it as though there's nothing wrong on these charts. And guys, that's where losses happen because you start holding for bigger moves when it's not relevant to the trade. Your initial stop is still where the market shouldn't go. Your first stop movement is still waiting for the reversal bar. And then it reminds you for the third time if divergence prints exits the trade. Divergence is a killer on 50-50 trades. A loss of momentum at an area where decisions are being made but not broken kills 50-50 trades. The sooner you believe it, the fewer losers you'll take. Super fast first targets, guys. $100 or the first trouble spot. And if your first trouble spot is $60 away, you've got to make the decision on whether or not you're willing to put the risk on the trade, on that medium probability trade for $60 on your first contract. And then quick profits on the second because it's not a home run. Guys, I put the KISS plan in the room. I dropped the different checklists in the room for you. I really went through, and I think that I gave you anything and everything that you could possibly need for success. Um, and then I'm going to give you one more while I get frustrated with my NinjaTrader, and I'm going to do a clean out while I do this. Guys, this is the easiest way to become a chart reader. This is the easiest way to find the high probability trend trades. This is the easiest way to take those 3 rules and turn them into a trade. And it comes through recognition, guys. You've got to recognize the individual parts so that you can begin to recognize them when they create a trade. So this is Chart Reading 101, guys, and this kind of goes with the spreadsheet. I created a whole tab on the spreadsheet for this Chart Reading 101. And if you go back and you take 25 pictures of strong triggers, rule number 1 being met, and you take 25 pictures of weak triggers, rule number 1 not being met, you're going to be amazed at just how quickly you can identify rule number 1. And then if you take 25 pictures of rule number 2 being met, you're creating recognition. And then if you take 25 pictures of it not being met, you're getting good at these termination conditions. And then if you take 25 pictures of that 50-50 and you're reminding yourself that it's not broken, you're going to be able to recognize it, and you're going to stop calling 50-50s a clear path. And you're going to stop calling terminations a 50-50 look. You're going to know exactly what you're getting into. And the task, guys, isn't just to take pictures. This isn't busy work. You have to annotate your charts with the whys. Why is it strong triggers? Why is it a termination condition? Describe it. Describe smalls above the large. What's the advantage? Why is it a termination condition? Describe the recipe for identifying it, the formula. What's the disadvantage? And if you do this for each individual picture, what happens is you have to spend time typing, which means that the words of the rules begin to associate themselves to the looks of the rules being met. You're analyzing it. You're posting it into your spreadsheet. And what you're doing is your brain has to process every time you do that. You have to go through what you're looking for, what you're looking at. And what happens is you're going to piece these looks together, and then you're gonna make a trade out of them. And guys, don't skip this. I've had a lot of people with more experience than you new users, use this. And they're like, holy crap, Mark, this makes everything so much easier. So if you take a picture of strong triggers, you have to write why it's strong triggers, what it looks like, what's the advantage, burn it in your brain. And then if you look at it again, and again, and again, and again, doesn't it make sense that strong triggers becomes an easy look to recognize? And then the flip side, the smalls are inside of the large, it's weak, anything can happen. Let me commit this look to memory. Let me make sure that I don't keep taking weak triggers. Let me make sure that I give myself the advantage of momentum. Let me make sure that this weak, wonky, nasty precedes a reversal look isn't when I'm taking trades, but rather the super strong, the best of the best, giving myself an opportunity to find success. And guys, this is your 101. Do it for each and every one. And I would be willing to bet, and I may be wrong, is there anybody in this room that's done this drill? Is there anyone that's taken 25 pictures of each of these columns yet? It would appear not. This is why you guys are struggling. This is why you guys are making mistakes. This is why you guys aren't doing it. Working on it, 15 of each. So I'm gonna tell a story real quick. And the story is this. Guys, when I was a personal trainer, everybody wanted abs. Everybody wanted abs. And what I would do is I would say, hey, this is what it takes to get abs. This is what it takes to get to where you want to be. This is what it takes to get to the point to where you can find the absolute best of the best. This is what it takes to have a six-pack. And everybody wanted the six-pack, but nobody was really willing to put the work in to get a six-pack. And then when they stayed fat, and I know you're not supposed to say fat, but they were fat. When they stayed fat, they blamed their thyroid. They blamed their kids. They blamed the weather. They blamed their high school injury. And the reality is, ladies and gentlemen, that if you really want to be a day trader, and the guy that's running the classroom tells you this is the easiest way to do it, this is the fastest way to do it, this is the one that keeps you from struggling the longest, and you make the decision to not go through the process, your results are going to yield exactly what you put into it. Your results are going to reflect your inability to do work. And I'm not trying to sound ugly, guys, but I get so many people, Mark, I can't do this. Mark, I'm making mistakes. And I say something like, well, did you fill this out? Well, no, that feels like a hell of a lot of work, Mark. I'm not sure I want to do that. I'm just going to keep taking the wrong trades and hope that it clicks. I'm going to keep trading in determination conditions and hope that it clicks. Guys, my job is to teach you to read indicators. Your job is to want it bad enough to do the work. So make a decision. I can't make it for you. I gave you everything that you need to be successful. The only thing I need from you is a little bit of effort, and your efforts will determine your level of success. So with that being said, I'm going to take 5 minutes. I'm going to walk around, high five my wife, scratch my dog behind the ears. I'm coming off a termination condition and I'm going into a termination condition here on crude oil, which means I'm going to sit on my hands and do nothing. Because my rules say in order for me to take a trade, I have to have a statistical advantage. And when I'm trading in determination conditions without momentum, I don't have a statistical advantage. And then if I go to my other one thinking to myself, well, maybe I'll find an opportunity here, I traded directly into a termination condition with weak triggers, and look how it pushed. I didn't have areas inside of favorable large triggers. So guys, I'm in a holding pattern and I'm doing nothing because nothing doesn't cost me a penny. I'll see you guys in 5 minutes. My apologies for getting a little school marm preachy. Make a decision, guys. I'll be back in 5. All right, guys, I am done with my 5. I am back. And again, my apologies for being a little preachy there. I don't mean to be. Um, I feel like a parent watching their child create challenges for themselves sometimes. And guys, I know the path of least resistance. I've broken it. It's okay if you break it, but get your homework done. And you'll be impressed at just how smart you've become. All right, so we are going to start clicking on everybody's pictures, guys. I clicked through the first 7 or 8. This is Joel. This is the offering plate. It may. Guys, when I look at your pictures, we're going to talk about advantages. We're going to talk about your entries. We're going to talk about your exits. We're going to talk about all the things going on. Paul got us going. Paul says, hey, all of my triggers above support and my smalls above my large is potential trouble. No, Paul, that's trouble. This 21 chart says, don't you dare on any circumstance take a short trade. It's financial suicide. And this is where adding too much can get confusing. Here we have a termination condition that created odds favorable momentum that gave you a 50-50 trade. And then you take it with a second divergence, which really does minimize the chances, but you're willing to take it because of the good top. You get in, your stop placement is absolutely beautiful where the market shouldn't go. And then you get out at trouble, and when that third divergence prints, you exit. So, Paul, this is an outstanding example of saying it's not perfect, but it's still really good. Let me find a way to capitalize. And the only coaching I think I could really give you on this one, Paul, is when you get this pivot stop out, when you get that second divergence, man, it's likely to push up higher. And this is where I try to exercise a little bit of patience, looking for that second area there at the synthetic triggers that are up a ways. Or do exactly what you did, where you get in and you keep your stop in the right spot. So nicely done on that one, Paul. And then this one, you've got everything down, but on your large chart, you've got weak triggers on a 50-50 and divergence with weak triggers on a 50-50. And you're absolutely right. You mentioned that this one was just hoping. And you let that market retrace against you so far, and there was no indication that it was going back down, and you sure did get lucky. And guys, these are the ones where I'm going to say you sure did get lucky. You broke your rules. You exited outside of areas inside of favorable large triggers. You held on forever, and man, they rewarded you for it. And I'm telling you, they rewarded you for it that time because they want you to do this every time, because that's how they're going to take your money, is from you believing that that's okay, that creates an advantage. And then large chart, we have weakened triggers right at the 1-to-1s. Nothing had gone through, not a clear path at all. Divergence into a termination condition, but it does bounce right off of support inside of favorable large triggers. And this great entry gives you the opportunity to take a shot. It gives you the opportunity to manage, to make quick profits, to protect yourself going into a problem area from a termination that reversed the market. So pretty cool. This strong bottom sets you up to take some chances, and you took them absolutely perfectly. Couldn't have done that better, Paul. Nice job. Can you guys hear me? Just want to make sure. Awesome. When it gets quiet, I get worried. And then, Paul, here you're just putting on a clinic. That termination reverses the market. The reversal in the market gives you the best momentum look you could ever hope for. This area has the potential to break. No divergence, perfect entry, beautiful stop, out at trouble, out at the fib. And then when it pulls back, the momentum is still good. The potential's still there. And you let it pull back to the area of resistance inside of favorable large triggers. Awesome stop placement once again. You get paid on the way down. Everything still says down, and you say, hell, I'm going to add on and make even more money. And Paul, this is beautiful trading, and momentum led the way. Momentum broke the areas. Momentum said, let's go down, Paul. And you just found opportunities, didn't hope for home runs, and were able to just make all sorts of money. I love this trading. That's beautiful trading. And then Joel, termination reverses the market, odds favorable. Joel, are you with me in here, my friend? He may have taken a nap. Guys, this is where I get a little nitpicky, and I don't mean to. I want to talk about two things. The first thing is this: termination reverses the market. Absolutely beautiful, guys. And I'm telling you, when decisions are made at key areas, the likelihood of it going the other direction for a ways goes up. Joel took this reversal. He took that odds favorable momentum, and he traded directly into a fib with all that momentum. And he labeled it a 50-50. It's not. It's a termination condition. And guys, sometimes just knowing what you're getting into creates an opportunity for you guys to manage aggressively if need be. And then Joel said, but I've still got strong triggers, and there was no divergence, and it was a great bottom, and it's a tiny little window of opportunity. He says, I'll take this trade. And if I take this trade, there's my first trouble spot. And then I manage aggressively as I come through. Guys, I love this trade. And for the brand new users, I tell you, guys, don't trade into termination conditions. You don't have the ability to read your charts fast enough to know if it's a good idea. This is one of those times when I agree with that trade 100%, that termination doesn't scare me as much as it would if it were a bad bottom. It doesn't scare me as much as it would if there were divergence on this trade. So Joel, I'm sorry you're not in here. I hope you listen to the recording, but that is great work. Nicely done. And then we have a true 50-50. Odds favorable, termination, everything's going up, potential to break. There is one divergence, but because of this look, he takes a shot, gets in, perfect, beautiful trade, off it goes. Nicely done again, Joel. And then 50-50, nope, this is the up, indetermination. We already saw that one. Good bottom, indetermination, very nice. That's a repeat. Trade so nice, he posts it twice. All the charts say down with strength. One divergence doesn't scare him. He takes the perfect entry, and down that market goes. Joel, 50-50. There is a problem into a divergence high. Trading into a termination. But again, no divergence, tiny window. He takes a shot, and it works beautifully. Guys, this is how you do it. Beautiful trade. Look at these entries, guys, like a sniper. That's my goal for you. Once you understand the parts that it takes to create a trade, it becomes easy to catch the trades. Are there any questions on any of those charts, guys? You're more than welcome to ask questions. If something doesn't look right, doesn't make sense, if you're just wondering, let me know. Because he's not in the room, I went a little faster on him. All right, Miss Jen. The best momentum look you could ever hope for. And we are coming into that 50-50 on the divergence high. And you take the quick little snapback with odds favorable everywhere and get out at resistance. And Jen, I love this trade. You've got a consolidating market a little bit here. And they tried to push down and couldn't do it. And they tried again. And look how weak the triggers are with the divergence. And then when these get above the problem area, right? The mid band's the problem area, but now we're screaming through them. You take advantage. Absolutely beautiful, Jen. Great trading, great chart reads. Momentum leads the way. Momentum pays dividends. I love seeing trades like that. And then one more. Weak triggers at a potential termination. Nothing inside of favorable large triggers. So what Jen is saying here, and I don't even know that you put it on there, is that when price pulls back to support and every trigger is pointed up when it reaches this area of support, can we all agree that that area is more likely to hold than not, just based on termination conditions? Jen, it's a beautiful entry for what's essentially an edge trade. Everything's set up, nothing blinked. You get in at the area of support, and then you get out at the trouble. And then you're like, nothing's blinking. Let me get back in at the mid band, and let me get out at resistance. It's a little less than high probability, but it's based on a beautiful chart read. And I'm telling you guys right now, once you can read your charts, you will find opportunities that you never dreamed you would find. You'll find opportunities that are so far outside of high probability, but still such amazing trades that you're going to find yourself getting paid on trades that you would have never taken as a new user because they didn't fit the rules, because they broke the rules. And this is one of the challenges that new users are going to have, is you're going to see Jen taking trades with weak triggers from areas outside of favorable large triggers. Not as good as the first, but it worked. And Jen, I guess the only question is, if this weak triggers into one-to-ones after two divergences just literally slaughtered your ass, would you be surprised? Would you for a moment? No. So you have to ask yourself, if me getting my ass kicked wouldn't surprise me in the least, why did I take the trade? And it may be. So the thing is you have to make sure. So you had a tight stop on it. Just make sure that you know what you're getting into. And when you know that it's less than optimal, it's pretty cool, because Jen said, I had a tight stop. They can get me for $40 for the potential to go up to that key area. And guys, what this is this is trust in your fibs. This is trust in the idea that there's people that control the market that want to get to that fib. And we talk about understanding where the market is likely to go. And then Jen, brilliant, capitalizing on the moves within. And then this is Cav. And I'm telling you, once you trust in them, they're amazing. This is Cav, right? Or no, this is Grant. Grant says 3 divergences in the same price range may terminate the trend. He's absolutely right. And when that gives him odds favorable momentum on a 50-50, wild horses couldn't keep him out of this trade. And he took quick profits, and when it pulls back to resistance, everything is screaming down. And Grant says, man, this one's not over. And then he gets paid down here. Grant, absolutely beautiful. 84 was your trouble spot. I mean, seriously, couldn't do this one better. Well, similar, except this one has odds favorable momentum. Big difference. This one has areas inside of favorable large triggers. Big difference. Not similar at all. Apples and oranges, Jen. But that's okay. To a brand new user, it sure feels like the same, doesn't it? And once you kind of get that chart reading down, it makes it easier. Gino took a shot. Man, I sure do prefer rules met. Took a shot. had a wish, had a hope. Everything said down, the best momentum ever, no divergence, pull back, and starts heading back down below. Gino, can I tell you something about this trade? Old Gino was getting in right here without gauging a reaction and getting run over and getting upset about this one. New Gino says this is a problem. Let's see if it reacts, and then once it reacts, I'll capitalize if it says it's still going to go down. Gino, gold star, brother. Isn't it cool? You don't know if that's going to continue up forever because it's a termination condition. So you say, you know what? Let's get the bounce off of it. When it clears it again, let's run that momentum down. Gino, I'm like giddy in my chair loving this trade. Nicely done, man. These are the parts of teaching this class that I get excited about. When I see you guys making strides like this, when I see you guys taking better trades. Oh, and Grant, we already saw that one. When I see you guys progressing, skipping the mistakes that you used to make, taking the trades that you used to not take, it's pretty cool. Gary, no odds favorable momentum, in a range, wait for the breakout. Just nothing to do, right? Lots of signals, no trades. I love that, Gary. Gary says, man, there's a lot of reasons for me to get tricked into a trade, but my rules aren't met. I'm going to sit on my hands and do nothing. And then the grand poobah himself, ladies and gentlemen, Ron C. Ron says that when I clear the area, when the momentum is good, I'm going to hop that train to the next area. I'm not looking for $1,000. I'm not looking for a home run. I'm going to get on base. And 4 singles is a home run every day, guys. And I'll tell you, if you try to jump in the way Ron jumps in without understanding why Ron does what he does, you're going to lose. And I'm going to tell you, I lost a lot trying to recreate this trade. And this is one of the biggest parts of it, is letting price clear the trouble. And once you let price clear the trouble, the odds of success go up exponentially. Ron, absolutely beautiful trade. And then strong triggers, no termination, odds favorable. And then which one are you asking about the termination, Paul? Are you asking about the divergence high without the triggers through? Or price meets prior divergence, and then it becomes a pivot stop out. So you exited at the perfect spot. You exited at trouble. That momentum carried it through just a little bit, but Paul, absolutely, when price reaches that divergence high and the triggers don't break, what an awesome spot to get paid. Instead of hoping, right? Because you could have hoped down here on a short and it reversed the market, and here it overruns a little bit with the momentum, but absolutely, guys, I get excited when I see you take profits where the market may reverse. Because you're so good at what you do, you know you're going to find another trade. You don't have to take every trade as a home run. You can simply get paid and wait for the next one. And then Cav, termination, all the way to the one-to-ones. Gap theory pulls it all the way up to the synthetics. And guys, this is what we call expectations based on patterns. And I'll tell you what, Cav probably strutted around the house a couple laps after this one. So here's the deal. Cav knows that when price reaches these yellow one-to-ones and the triggers don't break, it's a termination condition, right? And it says don't go short. Cav also knows that if those large triggers don't follow long, price is likely to close the gap because it hit these areas. So Cav doesn't go short, he waits for the retracement. And then when the retracement happens, and absolutely nothing on Cav's charts change. Cav says, I'm in at the synthetics. And he carries it right back to the termination condition. And Cav, this is beautiful. This is not a high probability trend trade. This is not something that wins more than it loses, probably in most cases. This is a beautiful chart read and accepting the risk. I'm guessing your stop was just on the other side of the synthetics. Perfect. So guys, this is where chart reading says, hey, this is a pattern that repeats itself over and over. Why not try to take advantage of it? And Cav, I love, love, love that you didn't fight momentum, that you didn't fight everything down against the termination. You used to take this trade a lot, but instead you waited for the higher probability and took it back down. Dude, that's awesome. I'm a pain in the ass, guys. It's what I do. But it comes from a place of love. I'm like that wicked stepmother. And then you're like, oh, or maybe stepfather, I suppose. Not a good bottom. Barely 50-50. Divergence prints. Good job, no trade. So, Jen, let's talk about expectations, right? And guys, we do this a lot where we talk about expectations. If I have a pivot that's not from an area, especially with strong triggers, the midband's my first trouble spot, right? The midband becomes my first trouble spot. So if I reach my trouble spot and I get divergence off that trouble spot and I've got split triggers, what a great decision not to take the trade. Because price isn't coming from a termination condition. The small triggers haven't smashed through the area. Losses of momentum on the 50-50. And Jen, these are the ones that when you become okay avoiding them, what you find is more often than not, you're in a better position at the end of the day. So beautiful chart read. Good top, odds favorable, 50-50. You realize you're not good enough yet to jump in fast-moving markets. Maybe, yeah. So, Haji, maybe with the speed, maybe this is why it happened. But let's talk about it real quick. I like the good top. Are you with me, Haji? I like the good top. I like the momentum. Divergence didn't print, but that came directly off of a divergence line. So I'm paying attention to this, right? And then divergence prints on a 50-50. Did you notice this giant split between your triggers? Huge split between the triggers. And the only areas are hovering in between the two. So, and this may be because it's such a fast market, right? It's moving too quick for you to go through your checklist in your head. Haji, what I've seen from you in the last week or two is that you're refusing to take these trades without a reversal bar, without a confirmation. And I've seen you do that a lot lately, which means that it really is beginning to become a habit, but it's not there yet. And when you speed up the market a little bit, you start thinking about the trades outside of the rules. You start thinking about the short rather than the split triggers. You start thinking about the, and that's totally normal. So maybe that's a really solid realization that if gold is moving too fast for you to process your rules in a timely manner, it's okay to maybe not trade it. No, not even. It pulled back to resistance. It was a 50-50. But he missed the most important element of the strong triggers, of the favorable large triggers, and the divergences on these. And it's really just, it's such not an ideal look. It's okay to miss these. But when you get caught up in the moment, when the market's moving fast, especially if it's rocketing off of that termination condition, then you find yourself more excited about the short than you find yourself excited about the rules being met because the adrenaline kicks in. And you're like, oh, I love adrenaline. Momentum to the downside. Let me figure out where you got in. 2385, 2385. So you're breaking through. You don't have momentum on the large chart. You haven't broken through the one-to-ones, and you got divergence. And the smalls are inside of the large. Cav, I will respectfully disagree with you that this is a momentum trade. Even though you're up $2,600 on simulator because your testicles are huge right now, probably riding shotgun without the fear of real money. Let me do this real quick. Well, first and foremost, Cav, I have momentum. Can we agree to that at least? First and foremost, I have momentum on both charts. I don't have momentum. My smalls are inside of the large here. My smalls are inside of the large here. So can we just, on the very basic understanding of momentum, agree that that isn't it? That this right here is not momentum, right? And this is where we get excited again. And Cav, it worked out great for you, man. It really did. But if you're taking a momentum trade without the advantage of momentum, well, then that's problematic. Wouldn't you agree? And if your large triggers say anything can happen, or your large chart says anything can happen, and the area is not broken, and your smalls are inside, man, you're just hoping that it goes down to that next area because it's a strong trend. And you know what? It worked. But from here, you could have come back to this fib, to the mid band, to the fibs up here. So you took a momentum trade even, Cav, and you completely ignored the loss of momentum, which means that there was a little bit of hope in this trade. Because how do you manage a momentum trade? Where's your stop? Your stop wasn't just on the other side of the one-to-ones because you would have been stopped out. Your stop had to be way up here. And man, that's a lot. That's a lot of risk on a trade dependent on momentum with none. Does that make sense? So it's a strong trending market to the downside. It's certainly not momentum to the downside. And then you have to ask yourself, how am I going to manage a momentum trade? What's it going to take me out of a momentum trade? For most people, a loss of momentum is a great beginning point for getting out of the trade. And then who is this? I'm sorry, I clicked on it and I forgot to look. Grant, termination, even better termination, odds favorable, 50-50, one divergence, perfect entry, money, money. Beautiful, Grant. I love it. It's just a 50-50 from a good top. So you ignore the one divergence. That's momentum. That's momentum. Everything says down and you capitalize and you make it look easy, Grant. Nice trade, man. I missed a post at 9:35. I'm sorry, Haji. Thank you for that. I bet it's a winner. I bet it's a winner. Good bottom, 50-50, odds favorable, no divergence, perfect entry. Haji says, freaking try to keep me out of this one. Beautiful, Haji. Thank you. I'm sorry I missed that one. Termination, full reversal, odds favorable, smash through the areas, no divergence, perfect entry inside of favorable large triggers. Stop was appropriate. And Haji, easiest money you made all day, right? Let's compare it. Hold on. Because I think this is a great thing. Let's compare that trade to that trade. Do you see the difference? And this is kind of a cool thing when you do it, guys, is let me put it next to yours. This is, where'd it go? That is the perfect 50-50. Small smash through, tight triggers, small window of opportunity, no divergence. This is just as sexy as all get out, right? Why? You got paid, brother. I might have taken first profits here and then tightened up behind it, but you got paid. And then look at this entry. Do you see the difference? This is what I really want you to get. So when you go back tomorrow and you study your trades, Haji, you're going to have to do two things. You're going to have to look at this one and say, I will never miss this look. This is everything perfect. And Haji, eventually, man, you'll hold on for bigger moves. But gosh, that's a beautiful trade and it's low risk. And that's a lot of money, man. That's a lot of money. That's over $1,000 in profit. So the key is you look at this one tomorrow and you say to yourself, this is my trade. This is what I want to do. This is the best of the best. And you say to yourself as well, if I can avoid giving back $1,000 on the ones that aren't right, giving back $1,000 on the trades with problems, then Haji, you're up the 1,000 and you're not just making up for the losses. And this is what that study in the morning is going to do for you guys. And once again, I hate to put you on the spot. Don't answer. If you're not going back every morning and looking at what you did yesterday and committing yourself to the idea that I know what worked, right? I know the trades that were easy, that I felt relaxed, that had advantages. I'm going to repeat that look. And I also know the ones that didn't work, that felt forced, that made me nervous. And I'm going to commit and I'm going to go into the day with the idea that this is not my trade. And Mike, I don't know if you do that. Haji, I don't know if you do that every morning. But if you're not, you're doomed to keep doing the same damn thing over and over and over and over again. If you don't start your day with clarity, this is what I did yesterday, this is what I'm going to do today, then why on earth would you expect your brain to not take this trade? Nobody does, Haji. And this is where, gosh, I feel like I'm a whiny little bee today. I give you guys the golden goose every day. And just like I've done myself, most of you turn it into fried chicken. And there's such an easier way to do this. There's such an easier way to do this. And it revolves around a little bit of study and giving yourself a little bit of clarity and committing yourself to not repeating the same mistakes. Jen, momentum, termination condition, momentum loss, momentum loss. Not even a termination condition. It's just weak triggers. You have a clear path, Miss Jen. You had a termination, right? And it gave you momentum. And maybe that's a great looking trade. Even that, you could maybe find a way. But up here, we're weakening. And we're weak on both. And your areas are no longer inside, which means that you're giving up two advantages. And that's a good reason not to take a trade. Giving up 66% of your advantages, guys, is rarely the path to success. And Haji, I hope you don't feel like I was beating you on that one, but guys, I'm telling you right now, this little idea right here, and let me share it with you guys. So when I started trading the NASDAQ, I didn't do this because I was too damn smart. It was a brand new market. It was brand new instances, all this sort of stuff. And I started trading the NASDAQ, and guys, I blew out 11 or 12 Apex accounts, trying to trade the NASDAQ like I would trade a different market, not going back and seeing what was working and what wasn't working, not giving myself that advantage of going into the day with this clarity. And then once I did it, and guys, this is like the second half of it, I started building this in my spreadsheet. Things that were working, things that weren't working, things that gave me an advantage, things that took an advantage. I did exactly what I ask you guys to do every day, And I feel very comfortable saying that I've got a pretty rock solid plan for trading the NASDAQ now. I know exactly what I'm looking for. I know what hurts me. I know what helps me. I know what I'm entering at areas. I know when I'm being patient. And it all came from coming back and studying what was working, what wasn't working. And if you go through that same drill, guys, just by default, you're going to find these opportunities. So, ta-da. Adriana, strong triggers, termination, 50-50. One divergence doesn't scare you. Perfect entry, money, money, right up to the problem area. Adriana, beautiful trade. Because of the termination that reversed it, one divergence didn't scare you. Perfect entry, great stop placement, out at the first trouble, out at the second trouble. Let's get paid. Do the happy dance and wait for the next trade. Absolutely stellar. And then GWC. I always enjoy GWC's charts. Odds favorable, clear path, perfect entry, money, 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 money. Holy smokes, GWC. I could teach a class with this chart. Beautiful. Adriana, is it getting easier? Is it getting less frustrating? Do you feel like the market maybe moves a little slower when you're not looking for everything? Good. That's my hope. That's my hope for you guys, is that you get to that point. And then, Adriana, if you don't mind me saying, do you see how when you start to look for too much before you're ready, it just frustrates you, doesn't it? You've got to give yourself that foundation, and then from that foundation, you'll be absolutely floored at what you're capable of. And you've done an amazing job with it. Thank you. And then Paul, no, not Paul. Cav takes the exact same trade. You get the reversal. Odds favorable. It didn't quite hit the fib, so it's 50-50. No divergence. Perfect entry. Money, money. Cav, outstanding trade. Beautiful trade. Momentum, 50-50. No divergence. So you don't sacrifice momentum when it's not from a good bottom. And man, you get paid at the problem areas. Cav, I'm having so much fun watching you trade lately. Clear path, strong triggers, no divergence, perfect entry. Money, 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 money once again. Man, Cav. You know what's fun though? And maybe it's just me. Is that you didn't have strong triggers. You did have a clear path. And drawing the arrow where the rules are true and taking the trade before they're true, it's a little bit misleading, I think. But here's the cool thing, is you're coming from the termination and every trigger is up and you clear the area and you pull back to it with no divergence and strong triggers. I love this trade. It had a clear path, it had an entry area, but it didn't have strong triggers yet. Does that make sense, Cav? And I love your exit, but drawing this arrow paints the wrong picture. Drawing that arrow, excuse me, you can still say to yourself, this is an outstanding trade, I love it, but the only thing that it does for you, Cav, is it puts on that management hat and it says, all right, the momentum isn't absolutely screaming on my large chart. Let me just be aware. And it never even blinked for you. And I think it's a great trade. And I think your exit is freaking outstanding. But I love truth in advertising because when you identify the challenges, it just prepares you for the management if you need to do it. And then GWC, I can't read all your writing. Let's do it. Termination condition, market reverses, smalls above, the large are starting to roll. You don't take the first one and then you let it get above the small triggers and you know where your stop should go. And yeah, that's I know exactly why you did what you did there. And you held on with a correct stop. And it goes to the first problem area and you take money. And then when it gets above it, you say, let's keep going with all that momentum. That's pretty cool. That's a snazzy little trick there. That's the let me just get out at the problem, and if it keeps going, I'll jump back in with that odds favorable momentum to the next problem area. Absolutely beautiful, GWC. Great trading as well. Guys, you are putting on a clinic today. All of you. Bad top, 50-50, termination, termination, termination. Not a high probability trend trade. Not at all. You're setting up for the 50-50 here, Jen. Do you see it? You're setting up for the 50-50. If you get that nice pullback with no divergence, there's the potential for it. But it's not a good top. You have a large gap back, but this is, and I talked about this earlier, and I want to do this. So, this area is not broken yet. This area is not broken yet. This area is not broken yet. You literally have a 4-point range that you're hoping breaks. Does that make sense? Which means that you've got a window of opportunity, at least right now with that trigger look, that is also a $200 window. Yeah, the large triggers haven't broken 3 areas. And it's not just that it's 3 areas. It's not like they're tight on top of each other. It's 3 areas that are spaced out. And then if you just look at that window of opportunity, it's huge. And I think these are the looks where it's easy to get tempted. These are the looks where if you're gonna take one of these trades, it has to be fast. It has to be aggressive. It has to be in at the right spot with room to run. And then I think you guys hear me talking about the pullback to the large triggers, which is the pullback to the small triggers on a failed 50-50. And that's probably lining up with an HVA line or something. I'm not saying that this is your trade, but the absence of momentum, the triggers rolling, the smalls down in that momentum phase, that's an aggressive trade that doesn't win more than it loses. But start recognizing this pattern. You used to catch it all the time, and you've gone a bit more conservative, which I'm totally okay with. And this kind of sets you up for the potential, but yeah, it's just messy. And it's okay to not trade messy, because I watch you trade not messy, and it's beautiful. Using what you learned today. Good bottom? No. Odds favorable? Yeah. Clear path? No. Entered at the highest point of support inside of favorable large triggers. And I like that you're doing that, Jen, because it's not just you reaffirming your rules, you're also providing great lessons for everybody. So thank you for that. So Muser, let's talk about this one. Are you with me? These are the ones that used to deflate me a lot. If it's not coming from the area, and I just don't think we got close enough to it, if this pivot isn't coming from an area, I'm not going to call it a good bottom. Because it didn't quite make the decision-making point. It was close, but it wasn't quite there. So this divergence is just a loss of momentum, which is okay. Muser, did you realize... I'm going to use the pen. Did you notice that you don't have a mid-band on this chart? Did you notice that? I'm not sure. You're missing indicators, my friend. It's okay, though. But you did have the absolute best momentum ever. Just screaming, 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 screaming. Man, have a blast at the beach, Ron. I'm jealous. I miss beaches. I'm going to have to go back to Florida pretty soon. So let's look at a couple opportunities, Muser. It's not a clear path, because your large triggers hadn't broken above the fib yet. So we're 50-50, but with the absolute best momentum ever. The absolute best momentum ever, we're 50-50. And your entry is right there where the smalls have smashed. And it's a little bit of a wonky look here. So you're putting a lot of faith on areas not inside, but you're using that support that you're expecting to break for your entry. And with all that momentum, it creates an opportunity. Um, it's a tougher one to trade. It's not high probability. Um, but because of the level of momentum, because it smashed through this support or what was resistance, because you're trading from the area and not into the area, lots of opportunities there, Muser. Great chart read. But what you need to do real quick for me is go to your large chart, right click, and go to your templates and load and get that 13.2 Renko bar template on there. So that you're at least working with all the tools that you need. It's a great read. It's not an accurate read based on this, but it's an easy lesson fix and trading from the areas instead of into the areas. And Muser, I'm telling you, man, with that much momentum, remember when I said that odds favorable will cover some of the mistakes that we make? That's a good one. We have odds favorable. We have divergence. If in a trade sell here, would have gotten out there at 5,100. Let me line up. That one might not have gotten you because it wasn't at the area. You would have had to trust these pink 1-to-1s a little bit. And then right to the trouble spot. When you get to the trouble spot, it pulls back to resistance inside of favorable large triggers. It's a weak 50-50, but because of the momentum and everything, it gives you an opportunity. And then it starts to weaken and your areas get outside. I think this one had to be taken as a momentum trade and then maybe an exit with the loss of momentum. And then this one becomes your 50-50 trade with everything screaming down. I think both are appropriate. And then if you get out at the first trouble spot and then that next divergence prints, that's a tough momentum trade to take at 94. It's right about there, but because there's not the momentum. It's a good read. Yeah. It sounds like you went through your head just fine with it. And then Dave, more of an edge trade. Let's see what you did. Weak triggers from nowhere. The midband is the expectation. And if the midband is the expectation and you're in that momentum phase, a pullback to the large triggers is a pullback to the small triggers, and the expectation is the midband. Dave, I think this is just a great chart read. And we talk about not a termination. You had a clear path to the downside. Do you see it? Let me see if I can blow this up a little bit. Because I think that this is a very common chart read. And JW loves this look. So let's talk about weak triggers, not from an area, beyond the areas. See how your path was clear, but the triggers were weak, and then divergence prints? The expectation here is right about there, right at resistance, right at the midband. So all you did is you took the perfect highest probability. Your large chart is in the momentum phase, and it pulls right back to the small triggers, which gives you a great opportunity to capitalize on the expectation of the midband. Things that you have to be aware of. That resistance could hold with all the triggers way down here, right? So you're taking a little bit of a calculated risk based on a pattern. And the fact that you let the large triggers, let me get it over here, that you let the large triggers roll. And the fact that it pulls right back to it and right at that fib, I think it's beautiful. I think it's a great trade. And the momentum on the large chart supports it. And you had a little bit of a trouble ahead of you, and you got out of the trouble. Nicely done. Very nicely done. But check it out. There it is again. Weak triggers right up to that midband and resistance. So beginning to create expectations. Whoops, what did I just do? Based on patterns. And once you create those expectations based on patterns, you develop rules to take advantage of them. And guys, that's what we do every day. That's how the KISS plan came to be. We recognized a pattern that created an advantage. We wrote rules for it, and then we teach it to you every day. And the same is true whether it is a high probability trend trade. And if I go to the tutorial section here, guys, there's what is called an HVA trade. There's your momentum trade rules. And all it is a pattern that repeats itself and wins more than it loses. So once you recognize the pattern, you create an entry criteria. And once you create an entry criteria, you go take pictures of it so you know what it looks like. And you create a plan based around patterns that repeat themselves and win more than they lose. And guys, the one that I just dropped in the room, this is for you guys that are taking trades outside of the high probability trend trade. This is for you guys that take those trades outside of the medium probability 50-50 trade. You momentum traders, right? If you were going to create, and I'm going to take this right here, you guys that love momentum trades, whoops, let me copy this real quick. Has anybody done this? Has anybody said, if I'm going to take this momentum trade, this is what has to happen? Large chart, odds favorable momentum. Right? That seems like a pretty key element. Small chart, odds favorable momentum. Is it safe to say that if I'm going to take a momentum trade, this should be the precursor? What else do I need? How about a large chart, clear path? And then finally, how about smalls beyond area I'm trading from on small chart? And I'm creating this plan, guys. And if you haven't done this for trades outside of the trades I teach, well, then you're guessing and you leave yourself open for interpretation, for opinion, for emotion. And then once you have it, let me see if I can find it. I took one this morning that fit those rules, and I'm not sure where it went. That's not it. But you have to be able to repeat the exact same look over and over and over again. And I think this was it. And then how's that for horrible stop placement? But the smalls broke through, odds favorable, right back to the 1-to-1s, and it goes down. And guys, this is kind of, you've got to be able to take that picture and find 10 of them of the rules being met, 20 of them of the rules being met, and make sure that they win more than they lose. And that's one of the things that I think a lot of people don't do, is they start to stray out. Take care, Cav. And they expect their high probability trend trade rules to work for other trades, and they expect their management for this trade to work for that trade. But if you go back and you look, and this is a great one for expectations, and Dave, this kind of goes back to what I was saying. Weak triggers, especially with divergence, right back to resistance in the midband. Weak triggers pushes all the way back to support right by the midband. Weakened triggers makes it to the mid-band. Weakened triggers makes it to the mid-band. Weak triggers actually pushes all the way back. So you start to create these expectations based on the patterns, going over and over and over. And now, because we didn't hit the key area, because we're coming off of resistance, because I'm in that momentum phase, you can begin to say, well, this market may be in a position, if I clear the area, and this is the part right there, maybe I'll look for a shot to trade this pattern, but I'm not trading into the termination condition. I have to clear it a little bit, and then I'll look for an opportunity for the short. So this fits the rules you just mentioned. Which one? Which direction? Weak triggers back, and then no rules met. Exactly. And then this is where some people say, you know what? I'll take a shot at the short into the termination, off of this termination because of the momentum. My first trouble spot is the divergence low. My second target is Fibonacci support, and I'm not willing to risk anything more. It has to go down from right here. Guys, this isn't a high probability trend trade. This is actually trading directly into a termination condition, trying to predict what the market will do rather than waiting for my rules to be met. And there's your loser. So the expectation is one thing, and that's where I was going with this one. The expectation is one thing. The rules being met has to be what drives you into these trades. And guys, I will jack it up. I will jack it up on simulator all day long to show you exactly how an opinion versus rules. The opinion is that it will continue down. You all know the pattern, right? Jen, you talked about it yesterday. But until my triggers get below this area, guys, it's not a good looking trade. And you set yourself up for the indecision in the market. And if I'm going to take a momentum style trade off of a termination condition, my small triggers have to break through this fib. And then maybe I'll take a shot. But do you see how damaging opinions can be? And you really do. It's about 90%. And guys, I love taking opinion trades with you guys because you guys get excited going, hey, wait a minute, that's awesome. But it's not. It's not a real trade. Guys, this is odds favorable. It's a 50-50. It's no divergence, but it pulls right back to support inside. Technically, this is a rules met 50-50 trade on crude oil. Pretty cool, right? And then my KISS plan says, if divergence prints, exit the trade. All right, y'all. I'm going to take 5 minutes. I'll leave you with crude oil. If you guys want to avoid me getting all behind the pulpit preachy, post a couple questions in there. I'll be back in 5 minutes to answer any questions that you have. We've already gone through every chart. We can watch the live market, no worries. If our rules are met, we can simulate some trades, but I'm not going to break rules anymore. We're only going to take trades if the KISS plan rules are met. So I'll be back in 5 minutes, guys. Go stretch your legs. What's up, Tina the Tool Lady? Super duper. Just taking a quick little break. All right, y'all. Here we go. Whoops, sorry. I forgot to mute the YouTube. They heard me chewing up some peanuts. Coming into the last hour, let's talk about what you guys want to talk about. We can talk about termination conditions, right? We can talk about three divergences in the same price range. We can talk about large triggers up, small triggers down. Guys, we can celebrate the fact that we got our butts kicked by breaking the rules, because as a brand new user on Sim, I've got to break rules every now and then. Otherwise, I'm not going to learn them. I'm not going to get focused on them. This is a little bit from the website, guys. This is the psychology of trading. And learning to trade at a high level goes beyond making money, guys. It's not about the money. It's about learning the patterns that create the results that you're hoping for. It's about learning the patterns that win more than they lose, that can be executed confidently. And this comes from winners and losers. This comes from you testing. All right, can I get away with this rule here? Can I get away with bending this rule here? And you know, the place to do that's on Simulator. Guys, Simulator it's you can't hurt yourself. But the flip side is Simulator also gives you a false sense of security, and it keeps you taking trades that maybe you shouldn't be taking. So focusing on the advantages, focusing on the execution, focusing on trading emotionless. Guys, that's the key. That's how you become a high-level trader. What else do I have? I've got all sorts of stuff in here. I save everything. I'm going to put this in the room. Emotion-free trading. Outstanding. Just discusses some of the psychological aspects that go into trading. You know, I played golf yesterday with this gentleman, older gentleman, and we were laughing, and he goes, man, he goes, everybody knows how to swing a golf club, but you got to figure out the way that's best for you. And that's when you develop a golf game. And I was like, whoa. I always find parallels between golfing and trading. And it's kind of cool. And I forgot where I was going with this. He was the neatest old guy ever. He was like 82. Amazing golfer, amazing human being. But he had these little bits of wisdom. And that's one of the things that he said to me. He goes, you understand. He goes, you've got a good grasp of what you need to do. He said, but now you just need to learn how to do it consistently. You lost my voice. Whoops. Okay, I'm back. Sorry. Somehow it muted. I may have accidentally clicked it. Can you hear me now? Good. But this gentleman told me, he goes, you know what to do, and you know how to do it. I've seen you do it. I hit some nice shots. He goes, but now you just have to keep doing it. You found your golf game, but now you've got to be able to do it repeatedly. You've got to be able to hit that same shot over and over and over and over again. And it was pretty profound, because it is very much like trading. You can know what you're looking for, but you've still got to practice it to be able to repeat it. You've still got to do it over and over. Guys, this is the same termination condition here that this was. This termination came from a bad bottom, and look at the bounce. Strong triggers. We're hitting this termination with weak triggers. I don't even have the same level of momentum as I come into it. So if this held, doesn't it make sense that this also has the potential to hold? And you've got to see it a few times. And there's just no reason to hope. You don't have to hope, guys. You're better than that. You've got everything that you need to understand when an area is likely to hold or likely to break. So practice, 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 practice. Mark Douglas ideas. When you stop expecting to win every trade, you start winning most of your trades. When you stop caring about the results, but you care about the execution of the method, you'll find that the results tend to follow. And I like this one. When you believe you know what is going to happen, you guys are probably like, oh, I told Mark it was going to go up, and he told me that I shouldn't make that opinion. When you believe you know what's going to happen, guys, you set yourself up for failure when you take a loss because you believed that it should have gone up. When you don't care what happens, that this trade doesn't matter, it's just one trade, it's a collection of 20 to 25, and you realize that it's just up and down ticks, that's all the market is. The emotional pain only comes from what you believe, and you create your own pain based on your experience with the up and down ticks. And that's why I always say, and Rob asked earlier, the idea of may, right? The market may stop here with these weak triggers. The market might stop here with these weak triggers. The reality is that I don't know whether or not the market is going to stop here. What I do know is that my statistical advantage, that my clear path is gone, so I have to decide whether or not I'm willing to trade into that area. Does that make sense, everybody? I am the only person in control of what I do. The only thing I'm ever in control of is whether or not my rules are met. And if my rules aren't met, no matter what my opinion is, I have to make the choice to not take that trade. I have to make the choice to just be a little patient. And until I'm there, to minimize your learning curve, post pictures of your trades in class. Guys, every trade, win, lose, or draw. If you win and the rules are wrong, you have a short-term victory but a long-term failure. How are you going to know the difference? To be sure, you need feedback. We're here to help. If you place a trade on the simulator, if you participate in class, there is no risk or loss of capital. You need someone to tell you what you did right or wrong. This is part of the educational magic Nexgen offers new traders. Use this outline for education, the same one that we've been showing for years, guys. Let's see if it comes up. I may have dead links in there. The path to success really hasn't changed over the last, I would say, 20 years with Nexgen. Since they've had chat rooms, you have to post in the room. You have to make yourself a little bit vulnerable. It is, Jen. Every day is a patience day, right? But you've been rewarded for your patience lately. I have too. Makes it easier to stay patient. The more you post in the room, the more feedback you get. The more feedback you get, the easier it is. The more pictures you put in the spreadsheet. Guys, this is a great day. So Jen, on a day where you have to be patient, right? So my rule said don't go short. And Jen, you've been doing a great job of this, but you guys that are new, I want you to see how many opportunities there are here. And I'm just going to label the chart. This is a termination condition. And this is a termination condition. And this is a termination condition. And 3 divergences is a termination condition. And guys, every one of these says that my rules aren't met. And look at what it is. It's a consolidating market, isn't it? There's a fight in between fibs. And now it's weak triggers at the termination condition. And let me give you guys a cool example of how patterns repeat themselves. I want you to look at this picture. I want you guys to burn this picture into your brain for a second. And then I'm going to go to the user guide, and I'm going to go to tops and bottoms, and I'm going to share with you this picture. And they're not identical, but check this out. Stronger triggers, strong triggers into resistance, strong triggers into resistance, full retracement all the way back to support, full retracement all the way back to support, retest resistance with weaker triggers, retest resistance with weaker triggers, and on this chart the market went down from that weaker triggers at resistance. And so far, this market appears to be dropping as well. Guys, that picture from the user guide was taken in 2021, I think. 2021. And it was crude oil. And patterns repeat themselves all the time. And I guess this is the point that I'm trying to make, guys. Patterns repeat themselves. The same damn thing happens every day. And the more focus you put on recognizing patterns, the easier becoming a trader is. The more you speak to yourself in terms of advantages, and then of course the opposite is true. What's the disadvantage of trading into a termination condition? What's the disadvantage of three divergences? What's the disadvantage of not having areas inside of favorable large triggers? What it does is it keeps you calm, and it keeps you relaxed, and it keeps you focused on the best of the best. So guys, what do you want to talk about? I'm going to click mute, and I'm going to go full mic silence. So next question has the floor. You get a private session. I'll be here watching, waiting, listening. Awesome question, Muser. How do I anticipate a pullback into favorable large triggers when there's nothing to indicate one? Let me think of the best way to answer this. The first one, and I guess the one that nobody likes is I hope, Muser. I hope that there's a pullback when my triggers are strong on the large chart. I hope that there's a fight from that small crowd when my rules are met on the large chart. And honestly, that's about the only time I hope when I'm day trading. But the second I see this look, the second my large chart says strength, the second my large chart has a clear path, Muser, I am 100% focused on my small chart because the rules are met. I am 100% focused on my small chart, and I'm just saying, come on, reversal bar, come on, reversal bar. And it's either going to happen or it's not. But the cool thing is man, I know that I'm waiting for it before it ever happens. I know that I need a reversal bar before that reversal bar ever prints. I know that that's the key to me getting into the highest probability trend trade. So as soon as my rules are met, I start hoping that the small crowd gives me a pushback. And if they do, then I just start going through the process. Every trade, Jas, every trade that I take is based on the large chart. 100% of the trades I take are based on the large chart telling me that I have advantages. 100%, Jas. And then my small chart is nothing more than an entry chart to take advantage of what the large chart's telling me. Does that make sense? So if the large chart is a high probability trend trade scenario, I look for the entry on the small chart. Entries on the small chart. I don't take entries based on my large chart because they're too difficult to manage. I'm too freaking good at what I do, to be honest with you, and that sounds cocky, but I am so good at understanding where the market is likely to continue. I'm so good at pinpointing where that bounce is more likely to happen. I am so stinking good at identifying my window of opportunity that I don't need to enter on my large chart. There's nothing on there. You're not listening to me. Show me your example of a good entry. With everything screaming up, where's your good entry? And then once again, how are you going to manage risk? So what the small chart does for you, Jess, is it takes that large chart view. It takes that beautiful look on a large chart and it tells you, hey, Mark, you have an advantage. Hey, Jess, you have an advantage. But just jumping in or trying to find an entry on the large chart, man, it's tough because I don't have any idea. Let me find it real quick. And this is such a good question. This is such a great question that everybody wonders. But the reality is, Jess, is I don't know if this large chart is going to stop at the mid band, if it's going to make it to support, if it's going to come down to these one-to-ones. The reality is I'm just not sure. So I can take the information that the large chart gives me, and inside of this one bar, I can pinpoint on a smaller chart exactly where the large chart is likely to continue. I can pinpoint so much that I can reduce my risk, that I can increase my profit potential. So you may develop a plan, and this goes back to why don't you just go long when the trend changes? You may develop a plan that works. And if you do, man, I'm excited. Share it with me. Because you guys being smart, you guys finding new trades makes me a better trader too. But I can tell you right now that I prefer $70 risk to $370 risk. I prefer a very concise area rather than a very broad stroke. And I can manage my risk more effectively by using a two-chart scenario. Does that make sense? Awesome. Man, I love that question. So TLC, you remember how's that for consolidation? Do you remember the rule, TLC, that in order for an area to be broken, both the small and the large triggers must break it? And I'm not sure if you're talking about the small chart or the large chart. Which chart are you talking about? Small chart? Okay, cool. So let's see if we can find a little example in here. So here we go. If I extend that divergence line all the way out, it's pretty cool, but you don't really have to. So you'll notice that this divergence stopped printing when the second divergence came in, right? So this divergence is kind of in the rearview mirror, but we still count it. And this divergence is the second divergence, but since it's in play, this divergence stops printing. And then TLC, when the small and the large get above this divergence, it stops printing. Now the count is reset. So this becomes your first divergence. And then it never exceeds, and you get those multiples through there. Does that make sense? So if you have one of those days where it's divergence, 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 it makes it through the two, it resets. That becomes your first. Small and large never get above this one. Yeah, no, that's a great question. And you see it a lot. You'll see it where and there's probably not a good view of it, but sometimes you'll see a run where there's like 17 divergences all the way down. And you're like, but Mark, there's 17 divergences. And you're like, well, honestly, it resets as it goes. The same way this divergence is no longer true because the large triggers are above it. right? And then there's a 50-50 from a good bottom with one divergence right back to support inside of favorable large triggers. And if you chose to enter at 94.50, congratulations, guys. You just made money all the way up. Great question, TLC. Thank you for that. And Jess, same thing. Great question. Muser, good top or bottom? No. Odds favorable? Where did you go? You went long? It is odds favorable. Clear path? No, not a single rule met. Anticipated the mid band as a price pullback, which it did as a complete reversal of the market. Should have seen it for what it was, termination condition. And Muser, there's one thing in this one that really keeps you out of this trade. And it's the gap theory. And guys, I appreciate that you're keeping this room going. Let's go back to this one. So the large chart midband is a termination condition if the large triggers are a full bar away. So what you have there, Muser, is, and I'm not going to lie to you, you know, it's weak triggers. Remember that lesson that we said weak triggers with divergence, we expect the midband? Does everybody remember that lesson? Because it's a pattern that repeats itself an awful lot. Weak triggers with divergence, I'm expecting the midband, which means maybe you'll find an opportunity to get up to it. But once I get there, when I hit this midband and the large triggers are a full bar away, the midband is a termination condition. When the small triggers don't break very far through, the large triggers haven't made it at all, it's a weak 50-50 at best from a bad bottom, and it's divergence. And look at the split on those triggers. Ugh. That's tough. And this is just, man, I sure hope it goes. But if you take a second, and I'm going to do this. Muser, can I give you what I feel is the easiest way to never make this mistake again? Or at least not make it in the near future after you study it a little bit. And I'm going to do this for everybody. And let me turn this into 100. And let me go to the 50-50 trade. Just for grins. So let me take a picture of this. Just for grins. So Muser, if I put this checklist on here, the first one is from a good top or bottom, and I'm forced to mark no. I don't have a choice. It's not a good top or bottom. It's not a no triggers through termination that reverses the market. Come on now. I'll just move the box. So that's kind of my first one, and that's a no. Do I have odds favorable on the large? I do. Do I have odds favorable on the small? I do. Do I have divergence on the small? Oh man, that's two of them now. Do you see how 50% of it just isn't in place? And then it reminds me, divergence, no trade. If you guys take a minute to study the KISS plan, if you guys take a little bit of time to commit to the idea, whoops, that was a no, that this is the highest chance of success. If you go back and study this a little bit, if you take pictures, if you put those pictures in the room, not just a trade, guys. The problem is everyone is trying to become day traders by taking trades. You're not trying to become day traders by recognizing patterns. You're not trying to become day traders by recognizing advantages or following rules. You're trying to get proficient by taking trades. Guys, I don't get better on the golf course. The only thing the golf course does for me is it gives me an arena to show what I've learned on the driving range. And you rarely get better when the pressure is on. So take that pressure off, Muser. Commit to a certain look. And then more importantly, go back and find it, right? Let's go find a 50-50. And let's look at it. And we'll do it like at 11:03. and that is a 50-50 with one divergence from a termination because it's the NASDAQ. And you've got to start building these in and see how they dance and see where there's advantages and look at the termination and look at the multiple divergences and look at the lower divergence. And this is how you stop taking that long. But guys, I didn't have to take a trade. I had to do the chart read. And that's, I think, where a lot of us fall short, is we try so hard to make money that we kind of deny ourselves the ability to recognize the looks that are going to make us that money. So slow it down a little bit. Guys, do some historical. But have that checklist out. Muser, do you trade with a checklist in front of you? And you don't have to answer if you don't want to. It's okay. Guys, you do trade. So when the rules aren't met on the checklist and you choose to take a trade, I love that you annotated it. I love that you said I broke my rules, that this is what went wrong. So now the next thing to do is to go back tomorrow morning, Muser, and the same thing that I told someone else, is you've got to look at this trade tomorrow morning, first thing, and go back and maybe annotate this one with gap theory and annotate it with split triggers. And tomorrow morning, when you're taking that first cup of coffee and your charts are opening and you're checking news, the one thing that you can give yourself, the biggest advantage you can give yourself, is recognition of what isn't working. And now you're not only looking for your rules to be met, but you're making sure that you don't see this deadly pattern that cost you money yesterday. Does that make sense? Having a checklist is great, guys. Following a checklist is harder. And again, I used to take this picture, and I don't mind putting myself on the spot at all. I used to take this picture, and this was my annotation. I was like, man, that's a great bottom, an odds favorable momentum, and a clear path, and I lost. Cost of doing business, right? Even if I put my checklist on there, I would convince myself that this was the best trade ever, because I don't know if you guys know this or not, I'm freaking brilliant and I can do no wrong. And I would literally annotate my chart. I would annotate my chart saying that I did great things. When clearly I didn't. But the one thing that I never did as a brand new user is I didn't say, hey, Mark, or for back then it was John Novak, hey, John, do me a favor, hold me accountable to my rules. Tell me that I effed up. Tell me that I broke my rules. Let me know. And let me know where, because I might have believed this with my heart of hearts. I might have believed that that was a great bottom, and now I need a lesson on it. I need to become a better chart reader. And I might have believed that this was a clear path, and I need a lesson on it so I can be a better chart reader. And I might have believed that that was the perfect entry inside of favorable large triggers, which means that I need a lesson on it. And the only way I'm ever receptive to the lessons is if I drop myself back into the role of student, if I admit to myself first thing every morning that I don't know everything, that I need help, because I have goals that can change my life forever. I have goals that'll keep me from going back to work. I have goals that will buy me anything that I want. I have goals that will create generational wealth for my children. If I just learn to follow my rules, if I just learn to have that one easy trade. And guys, you got to look at it like that. You don't have to be a badass today. Be a badass in 6 months. You still end up a badass. All right, Paul puts in, I see all these short synthetic fibs on the large chart. The large chart native fibs run across the chart. The native fibs you're told are important fibs for bottoms and tops, the ones we are coming to. Along the way, there's short fibs, other time frames, and kind of the journey. The question is, when do you pay attention to these short fibs? Great question, Paul. But never, if you go back through every video that I have ever made, every video that I have ever made in this room, I have never once said that one of these lines is more important than the other. Every time, Paul, I have said if price reaches one of these areas, and the triggers don't break it, sit on your hands. I don't weigh them out. I don't give them more importance because look at this. The 21 fib stopped the market cold, right? The divergence from the 13.2 stopped the market cold. Yellow 1-to-1s stopped it completely. The native 13 fib stopped it. The 5-1 fib stopped it. And the only thing that is in common with everything going on here is that price reached the areas and the triggers didn't break. So don't create rules for yourself, right? There's 3 time frames because all 3 time frames are important. One is not more important than the other. And it's hard to believe that sometimes, because if a native fib is good, well then maybe this fib, and it's only a 5 and that's a 13. But wait, this is a 21 and 21 is over 4 times more important than 5, but it's not quite twice as important as 13. And this divergence is blue, and everyone knows that that's a cool color, and magenta is a warm color, and hot melts ice, so magenta must be better than blue. And yellow, who the hell is scared of yellow? That's like cute little chickens. So I'm not afraid of baby chickens. And cool colors don't. So, and I know that I'm being a little ridiculous right now, but your brain will literally do that to yourself. Your brain will tell you whatever your brain needs to tell you to get you into a trade, which is one of the reasons you've got to learn to adhere to rules. You can't succumb to that little devil on your shoulder telling you, just break your rules. This is the one that's going to work. I know it's a 50-50 with no divergence, and then once divergence prints, maybe I got to be calm a little bit, right? I've got split triggers. Is it going to go from here or here? You've got to be willing to admit that you just don't know. So, great questions, everybody. These are the things that make us great traders, guys. And it's not, oh, look, there's odds favorable momentum again. Guys, everybody has this stinking rule down on day one. It's the, hey, Mark, I was wondering if this synthetic fib is just as powerful as a native fib, and I've been afraid to ask because what if it's a silly question? It's not a silly question. And there's an awesome answer that's going to help you if you ask that question. Well, what about these 1-to-1s? Are they more powerful than that one? And is this one any more powerful than the pivot stop out at the 1-to-1s? The reality is that termination conditions kept money in the bank, guys, for the better part of 30 minutes. Until the rules were finally met up to the next key area. And now look at how price is dissecting these fibs. Look how decisions and fights are being made right at key areas. And it's not even a native fib. And look how these 2 bars encompass all of these shenanigans. So just this goes back. I can't find a large chart entry because I'm going to get absolutely whipsawed unless I'm willing to keep an enormous amount of risk on this trade. And me personally, I don't care for a lot of risk. I'm much better at being risk adverse. So again, guys, I feel like I'm going on a soapbox today, and I don't mean to. And your questions are absolutely amazing. And they're very relevant. And you've just got to work through all this stuff. You've got to ask these questions so that you can get to where you want to be. So if you're brand new, let's say it again. Let's do this one more time. If you are brand new, there is a 100% proof is in the pudding, repeated for years path to get to where you want to be. And it's post in the room and use your spreadsheet. If you are a brand new user, there is a 100% foolproof way to understand these looks in the most rapid fashion. And that is take 25 pictures of each condition and get them into your spreadsheet. And I've already started it for you. And commit these individual looks to memory. And then once you have that, you're going to be able to find entries, guys, and you're going to be able to pinpoint entries, and you're going to learn to trust entries, and you're going to be able to never skip an entry because your gut Gut said that's not an entry. You're going to say to yourself, my rules are met. I have to take this trade. It creates a statistical advantage. And until you can do that, you just have to keep practicing, right? My rules say 2 divergences on a 50-50 is not my best chance of success. That's what my rules say. So some of you are short. Some of you are taking this short because of the good top, because of the odds favorable. I'm not allowed to. My rules say don't. What do your rules say? If you're not sure what your rules say, you'll take this one once and then you'll skip it the next time and then you'll take it the next time and then you're not being consistent. And if you watch the most successful traders out there, their trades look the freaking same every time. Every time. Go back and scroll through Ron's trades. They all look the same. I would say 70% of Cavs trades look the same. So boxy. So boxy. Da, da, da. Oops. Man, I thought nobody posted since Jen. Nathan, give me 1 second. I'll get you on this one. Jen, did it reach it? Did it reach those pink fibs or did it get close to the pink fibs? Let's start here. Pastor Novak. That's kind of funny. The gospel of Nexgen. And this is important. It didn't reach. So let's talk about something real quick, Jen. We'll talk about a couple different things. But the first thing, and I love this, is how fibs are made. When a mommy fib and a daddy fib love each other very much. No. So when you open your software, every swing in the market is measured up, down, blah, 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 thousands of calculations, and it creates fibs. And fibs are areas. Fibs may be a tick or two above, it may be a tick or two below. These small swing one-to-ones are a 100% precise, exact, without question measurement. They are a 100% projection. It is a 100% to the tick measurement. And the same thing is true of the yellow one-to-ones. So, and then the same thing is true still for these divergence highs. They are 100% to the tick. So Jen, when I get these pink one-to-ones, let me go back to your picture. When I get these pink one-to-ones, horseshoes and hand grenades doesn't count. It's very much 100%. It's got to hit it. So it takes a little bit of the pressure off wondering if it's close enough because they're a very exact measurement. The other thing that happened on this chart were 3 divergences in the same price range, right? And then were you here? TLC asked an amazing question. Mark, when do I not worry about these divergences anymore? When both the small and the large triggers break. I'm going to take this out of the equation. So these 3 divergences in the same price range on a 50-50 are still very much in play here until we get above it. So the one-to-ones, they could be a termination if price actually gets to them, but we're still dealing with 3 divergences. Does that make sense? And this is where the large chart's looking pretty good, but the small chart still says, let's be patient, let's wait. So awesome. Nathan, can you show me a picture of your chart? So if you've got missing fibs, the first thing that I look for is I go to data series and I make sure that tick replay. Small and large TLC, the same recipes for termination conditions, small and large. And the small and large, the small are 2 lines and the large are 2 lines. So both lines of both. All right, so Nathan, right click. And what market is this? Okay, this is the NASDAQ. So it looks like you don't have your synthetic fibs on. which means that all of these 5-1 fibs, all of your higher time frame fibs aren't printing. So right click and tell me real quick, just give me a Y or an N in the room. Is tick replay tick? Is it checked? Man, termination for the win. Thank goodness my rules said don't take it. So go ahead and click tick replay and click OK. And give it a second to run through and recalculate. And let's see if that gets you fixed up. Because the synthetic fibs rely on that tick replay to make it come about. What do you guys think? Termination, 50-50, two divergences, don't take it. Now we've got a termination condition and everything is starting to push down, but my smalls are still above the large. I'm still in this little indecision area. My rule, I don't have any rules met. I had rules not met that kept me safe, right? I had rules met that gave me small profits and had to take it off. So everything's rules, guys. That's still a termination without momentum, and I'll be damned, it pushed right back the midband. I'm saying I'll be damned a lot. Sorry. Miss Michelle, bad entry. Thought it was going without me. Jumped in above midband. Bad entry. So let's talk about it. I have momentum. It's not the greatest, but it's pretty good. I do have two divergences. And the challenge here, Michelle, is that you don't have areas inside of favorable large triggers. And what you tried to do on this one, and this is gold, is that right? Is you tried to institute a NASDAQ entry on a gold chart. Does that make sense? You tried to institute a NASDAQ entry on a gold chart by waiting for a close above the small triggers. And then once this third divergence prints, you've really got to just say, okay, it's done. And it does end up going up, right? So you have, let me see if this will help you a little bit. Mesmerized. Well, the big chart looked good. It really did. But the big chart still had the first stage of momentum loss and then two divergences. So when I have these two divergences, let's just do some chart reads, guys. This stuff's fun. If I have this look, this pivot stop out look, the smalls are inside, they're weak, I'm expecting a bigger pushback, right? There's no doubt about that. And let me show you an expectation here. And you may have seen this before. You may have not. When I get this pivot stop out above me and things weaken a little bit, I at least expect it to take out the previous pivot. So I can create this little imaginary line. So I have a choice. I can take it right at the area below the pivot. And even though it's outside of triggers, what I'm really saying is this is my area, right? And if it goes, you know, $100 past it, maybe I exit the trade. But I know that I'm giving up momentum. And I also know that I'm giving up an area inside of favorable large triggers. Three divergences says, hey, this one's even less likely to work. And that's your exit, right? Maybe about right here. And then you're just in this holding pattern and you're like, man, I think it's going to go up. I don't know if it's going to go up. And you can take the reversal bar if you're convinced that that's where it's going. But you start to give away a lot of advantages on this one. And taking this super late entry, all it did was increase your risk. And this is a NASDAQ thing. The close above is a NASDAQ thing. It's not a gold thing. And guys, one thing that you guys that trade gold don't really understand is gold is temperamental and gold tends to overrun. And gold isn't smooth like crude and it's not smooth like the S&P. And if you're gonna trade gold, you've got to be pretty solid on what you're looking for. Gold is a run you over, stop you out, and then go kind of market. Oh, Haji couldn't care less about the Middle East. And I know that that can affect, but honestly, the Middle East has nothing to do with odds favorable momentum, a clear path, and a pullback. Um, but this one didn't have the best momentum. Neither did it have an area inside of favorable large triggers. So 66% are gone, right? It's a little faster, which is nice, but I like NASDAQ. So this is the one where, and Michelle, I'm trying to play this out every way in my head that I could do it. And you don't have any fibs on here. So if I have weaker triggers, if my small chart says weaker triggers, and I'm not hovering anywhere, right? I don't really have anything on my small chart inside of favorable. What's my large chart area that's likely to hold with this look? And maybe you have to readjust when the small chart isn't perfect. Jess, I think we just found something, brother. When the small chart doesn't give me the perfect entry, what's the area on my large chart that I expect to hold? The midband with everything up, right? And that midband is right about here. And I don't know. I don't trade gold because I get stopped out on gold more often than I'm comfortable, Michelle. The reasoning behind your trade was great. The look on the large chart was pretty good. The small chart kind of killed it because I'm beyond the correction point. So let's do the correction point lesson. Triggers are moving averages. On my small chart, I expect price to come back to the moving average. So this is where I expect price to come back to on the small chart. Does that make sense? Guys, give me a Y in the room if you're with me. I expect price to retrace back to these trigger lines. This is a moving average. It's just someone told me a smart way to say it once. If my areas are beyond the correction point, the reality is, guys, I don't know if it's going to go to the midband. I don't know if it's going to go to the one-to-ones. I don't know if it's going to go to this midband. I just don't know. I just don't know. So maybe I take a higher time frame at that point when it's beyond here, and I say if price reaches the midband and all the triggers go back up, well, then maybe I'll look for a shot down here. And that's this reversal bar here. And that seemed to be the one that worked. And I'm just going through it from a chart read standpoint, Michelle. I'm not a fan personally in my own trading of taking entries beyond the triggers. Not a trend trade. If I do that, I like to see Fibonacci support right here. I like to see a hard and fast number right here, and I'll force it to go to my number instead of just hoping that the midband holds. Does that make sense? This read is great, though, and I don't want you to feel bad about your read. Your read was great. And just give me something concrete, right? Because the midband's just a moving average, too. This is where I say, give me fibs, give me one-to-ones, give me something to where I can feel better about this weak momentum trade continuing to the upside. And this is just me. Guys, you're always like, oh, Mark can look at it and rip these things apart. I don't have any emotion and no emotional connection, and there's no adrenaline. I'm looking at these after the fact. And I guess I'm saying that because if you guys go back and look at this after the fact, Michelle, without the emotion of the trade and the recent loser, would you call that odds favorable momentum if you were grading my paper? If you were reading my charts, would you let me call that odds favorable momentum? You would? Okay, so hold on. Let me go back. And let's look at it. That has nothing to do with momentum, does it? Momentum has nothing to do with Fibonacci. This is odds favorable, and this is odds favorable, and I can literally see the smalls returning. I can go back, hold on, one more picture. one more picture. I can go back to this and I can say, Michelle, remember how we talked about it? This is odds favorable. This is a market that's slowing down, and this is anything can happen. So you've got to be able to police yourselves, guys, the way I police myself. So I'll ask again, ladies and gentlemen, if I present a chart in the room with this trigger look, I can't call it odds favorable. It doesn't mean that there's not a potential trade, Michelle. But if I know, and let me close this out, if I know that that's not odds favorable momentum, and I know that this is slowing as well, I know that I'm starting to lose advantages. And these are the things that you'll be able to put into play as you begin to look at these things. And I've never really thought about going to the large chart when I'm beyond here. Give me something solid. And I still think your read was great. You just didn't have the momentum for the market to just rocket off into space. And you got that little loss of momentum dance in it. Does that make sense? I hope. I mean, that's a great large chart look for more up. It just is a little indecision on the entry area because it didn't quite come together. So, and this is weak triggers, not from an area. Can we create expectations based on patterns? There's your mid band. And it's the gap theory, guys. I reached Fibonacci support in the mid band, and the large triggers are all the way up there by the reversal bar marker, which means I'm probably not looking for a momentum short. I need a few more things to happen for this to work out. So